The questioning coming particularly from the House probably will be less market focused. So the statements, I think, probably will give us the clues as to kind of how the market is going to react. You've also got JOLTS data, which I think will be interesting on the labour market side of things, plus the beige book. Yesterday, I thought, was much more corporate. The Apple story yesterday, what happened with tech yesterday, is obviously hugely significant. Was Friday the near-term peak? I think we'll find out over the last couple of days for equity markets. Anyway, here we go. European equity markets are open. We're expecting at an index level things to be reasonably flat. I think at a single stock level, you will see some interest, though. It'll be interesting to see what does get a pickup this morning. Score looks like it's an early gainer, so the insurance sector firmly in focus. There is that upgrade impact already on TUI. You can see that first thing in the market. We're expecting, I think, probably big moves this morning from IAG as well. In terms of kind of what else is happening, Legal & General looks a little bit soft. Be interesting to see which stocks move or have moved, maybe they've already moved, into the budget as well. If the consumer does get a boost today, do you see stocks like Marks & Spencer having a very good day? Do you see maybe some of the other retailers picking up on the back of that as well? So it'll be interesting to see whether there's an effect there too.
Yeah, really interesting to see some of the makers of vapes accepting the writing on the wall on that one and saying they're very big fans of regulation, I think was some of the line coming out of management there. So we're interested to watch anything in relation to the budget, of course, waiting for that just after midday here in the UK. For the moment, looking at the sector breakdown, your point around travel and leisure is well made, Guy. We've got travel and leisure as one of the best gaining sectors. Even that's only up 0.2%, though, so this is a market that's not going all that far, but we do see travel and leisure doing pretty well. Real estate also not a bad performer today, up by around 0.2% on that particular sector. I was looking to see if there was any more read across from the China story into basic resources, because we saw some strength in the China session, another day of digesting some positivity, perhaps. At least, no, not positivity, ambition around those targets. That's how the Chinese described it, even if investors were not quite convinced of that ambition. But yesterday, that was something that weighed on the mining sector. Today, we see a little bit of a bounce there. Talk of another R cut being possible in China sometimes puts some fire under the mining space.
It absolutely does. For me, it's all about the tech space, though, and kind of this. We talked about this in yesterday's session where we had that AMD story, the Apple story, a lot of China pressuring tech, and it kind of showed up in the European session first, and then I felt like the U.S. kind of played a little bit of catch-up. Today is a little bit of the reverse. Some of the underperformers of yesterday are the outperformers today. ASML, for example, higher in today's trade. And I bring up ASML specifically because there were some headlines, I want to say about an hour ago, that came out from the Netherlands, pushing back on the
newspaper.
Pushing back on ASML's plans to potentially expand globally. I think this is a really interesting dynamic because they've been trying to bring in more immigration to help with their expansion, to help with their hitting their capacity, and getting some serious pushback on the political front from the Dutch government. Now they're looking abroad, and again, the Dutch government is saying, no, you're staying in-house.
So, but it's an increasing theme, isn't it? So you referenced the AMD story yesterday. Look at what's happening there with the US government and its attitude towards these new powerful AI chips, too powerful for the US government, even the chips that have been designed by AMD for the Chinese market. We were talking to Saab earlier, we're talking about kind of how conflict is evolving here. It is clear that one of the major fronts that has now opened up is on the AI story, and it's going to be interesting to see just how kind of competitive and combative that ultimately becomes, particularly if Trump ultimately enters the White House for a second time.
This is where policy is actively affecting the markets. There's kind of this domino effect that I think a lot of people say, oh, it's policy, it doesn't matter. Here's a very clear read-through, and I think the chip sector is so interesting. ASML in particular is so interesting because chips are essentially kind of the new oil. They're the new bellwether for the global economy.
How do you plug in the political risk? I think there's already been some of it already, but how do you plug in the political risk
And I guess
those
also
the
political risk is sort of in the same direction under both options, Republican and Democrat, isn't it? But it's just scales of political risk.
It absolutely is. But look, on the one hand, the easy answer is, okay, we quantify the impact, and this is where you have to do a lot of kind of funny math around what the actual rate there is, and that's where the policy numbers really matter. Whether that 60% number, for example, from Trump is actually going to be 60% when you kind of look at all the nitty-gritty. Yeah. The other piece of the equation is how the stocks actually trade around. And I think the best example of this is post-COVID, for example, when you had airline stocks, regardless of the fundamentals, regardless of what the actual policy around COVID was, they kind of worked as this vehicle of volatility where any COVID headline came in, the airline saw the most volatility. And I think chips and ASML in particular for the European session are kind of following that. Any policy headline, and this is going to be the vehicle that moves. And we talk about ASML. We should also mention that DHL is going to be one of your biggest index contributors to the downside as well, down about 4% this morning. That buyback not helping them.
Okay, so that's what we're seeing on the markets right now. Let's just update everybody on what we're expecting today. We've got quite a lot of data out as well as Powell speaking. So we get at 10 a.m. UK time, Eurozone retail data. So that'll be something to watch on the European consumer. 12:30 London time, we'll get the budget here in the UK from the Chancellor. At 3 p.m. UK time, the Fed Chair Jerome Powell will be testifying in front of Congress. At 3 p.m. London time, JOLTS data hitting the Bloomberg terminal. So nice reading on job openings in the US. Finally, at 7 UK time, the Fed will release its beige book. So quite a lot in there. We talked a little bit about Powell already this morning and some of the risks around that, you know, whether that delivers much. Interesting that we had a conversation about this yesterday with Sam Linton-Brown, who joined us, head of global macro strategy at BNP Paribas, and he was talking about hawkish risks around Powell. Let's take a listen.
No rate cuts at all this year. I think that will hurt risk assets, almost independent of the growth backdrop. I think the key point is Powell's told us inflation is both necessary and sufficient to cut. So the scenario in which they're not cutting at all this year is one in which inflation as a necessary condition has reaccelerated. So even if growth is strong but inflation's coming down, the Fed's going to cut. So I think for the market, if they're not cutting, it almost by necessity has to be because inflation has reaccelerated, and that would be a challenge to risk assets.
That was Sam Linton-Brown talking to us just yesterday, head of global macro strategy at BNP Paribas. Let's continue this conversation. Peter Shafrick joins us, global macro strategist at RBC Capital Markets. Peter, nice to have you with us. What's at stake for you then when it comes to Powell today? Because we heard there about risks of hawkishness. We also, I was reading some Bloomberg economics analysis saying, well, he just always takes the sort of center line, the median Fed voice, speaks for the committee. So is there any risk around Powell today?
I mean, there's always a risk if the Fed chairman speaks, that's for sure. But we think it's relatively balanced. I mean, we actually think that he's probably going to stick to his guns. You know, to paraphrase him, he said they're confident, but they want to be more confident. And I think that probably still remains the case. But the risk, of course, for the market is we've come such a long way since he uttered those words last time round. The market looks much more balanced. We even priced at one point a little bit below what the Fed, what the SEPs are telling us. So obviously at that point, the risks are much more balanced.
You say he said already that he's confident. So you mean in the deflationary
exactly,
trends in the year.
exactly.
So is it possible that we're looking for a little more clarity? And maybe this is something he'll be asked by lawmakers. You know, what is it exactly you're waiting for before you cut rates?
Well, he told us that already. He said he wants to see more of the same. Essentially, he wants to have confirmation that we're settling around the target and we can remain there. And that just requires a little bit more data. And so essentially, they're playing for time. And I think that's what he's continuously will be doing.
Is recession risk even remotely on the table when he kind of gets plummeted with questions from a lot of these congressmen and women? I feel like that, from an election point of view, is what they're going to be focusing on. Do you think he'll comment on that and whether a no landing scenario is now the base case?
I mean, if he's asked, he's obviously going to comment, but when you look at the data and how it has come in, you know, the risk has decreased significantly. I mean, what they have stressed in the past is that as inflation is coming down and rates are staying high, that then obviously real rates implicitly are going up, and that they could potentially want to avoid that in order to foster that soft landing or, you know, avoid the recession in the first place. So he could go there, but again, I think it's not the main topic at the moment.
What about a reacceleration of inflation? We're seeing it in pockets of the world, not in the G10, but pockets of the world that for some might suggest that it's kind of a canary in the coal mine for what you will ultimately see in developed economies. Do we need to worry about an inflation uptick?
I mean, again, sort of, you know, when I said earlier the risks are more balanced, that is clearly the upside case of the risks, because we have seen the data coming in somewhat stronger, particularly out of the US. We have seen the latest inflation numbers not sort of behaving exactly as the market was predicting and surprising slightly to the upside. So that is a risk for sure. And if you push me and say which risks are a little bit more pronounced, I think that's probably the one.
But what drives that risk, though? What pushes it? Is it a commodity story? Is it a housing story?
I think it's predominantly a strength of the domestic economies coupled with an ongoing tightness in the labor market. I think that's essentially
a wage story, then, it feels like. Okay.
For sure.
How's the ECB going to listen to what Powell says today? What's Christine Lagarde going to be thinking? She's under much more pressure to cut, it feels like, right now. How big a risk is there for the ECB that if the Fed sits pat, ECB has to go, that actually that has some profound market impacts?
I think it's a very good question, because in my mind there is a difference between the official line that Lagarde is going to give us and reality. Officially, she will say the ECB is independent, different economies, they will make the decision on their own and all that jazz. In reality, and actually I can't remember exactly who said it, but one of the ECB members has said that it seems very unlikely that the ECB would go before the Fed.
He was talking to us.
So there we go. And frankly, I think that seems to be true to me. Whether we talk about a couple of weeks difference, because that's just how the meetings are scheduled, that's a different story. But that the ECB sort of really kicks off and the Fed officially holds back for much longer, maybe by changing the SEP forecast, I think that just seems unlikely to me.
In terms of kind of how we should think about this at the margin, how close do you think we are to should be pricing in 2 from the Fed this year? Like, how close to that narrative do you think we ultimately get? And how late do you think they could now come? Christy raised the point earlier about the election. We had Super Tuesday last night. Is the Fed setting a trap for itself?
I mean, there's an ongoing story in the market when we speak to our clients about whether the US election somehow changes the Fed's thinking. We don't actually think that this is going to happen. If the Fed feels that they need to cut rates, they will go, and they will probably keep going even over the election. And there have been precedents in the past, in either direction, by the way, up and down. Yep. So I don't necessarily think that this is really the story. So, at the end of the day, I think it comes down to whether or not the Fed or the other central banks, for that matter, feel this is the path they need to go. And if the data sort of gives them the cover, they will do it.
Okay, so you sort of detach the politics and the monetary policy a little bit then as we get later in the year. Let me ask you about what messaging you take from what happened with gold over the last few days, because it's all up at new highs, and that seems to fit with an expectation the rates are coming down, but nothing's really evolved in that direction over the last few days. And so a lot of people looking at this gold price and saying, does it tell us something spooky? Are we concerned about geopolitics here? What's your thinking?
Well, I think to sort of connect the two markets in a way, I mean, we did sort of top out a little bit, 250 10-year bonds, 430 10-year treasuries, roundabout. As we discussed earlier, we were pricing at one point less than the 3 rate cuts from the Fed, and things have sort of turned around a little bit. And I think that coincides then also with the gold move to bring that in. So I do think there is a connection between the two. But obviously one of the other stories in the market is that pretty much everything has been going up for a while. And I think gold is no exception there.
So what is if we're talking about kind of hedging the monetary risk, if we're talking about hedging the political risk potentially, even if we're several months out from the election, what is the hedge that is a no-brainer trade for the next year?
Well, unfortunately, I don't think there are any no-brainer trades here. But I mean, I think one of your colleagues mentioned it earlier that volatility has been coming down. And that has been the case, for quite a few months now, that people have been selling volatility. So that could be one of the things where you essentially just buy some vol, buy some straddles, buy some strangles, maybe on the fixed income market even. So that could be one of the hedges where you seek out opportunities, particularly where volatility has been depressed significantly, just to put that on if things go wrong either direction.
Is there a gilt trade into the budget this afternoon?
Well, I mean, there might be a few, but, I think Mark, your colleague, said it earlier. I mean, it doesn't necessarily lend itself to spark a lot of fireworks. The two things to watch out for in my mind. One is what is the absolute DMO remit going to be? Yep. We are probably on the top side of expectations. We look for some 266, which is not exactly the absolute maximum, but is on the higher end. And then also the split of shorter versus medium term and longer dated issuance. So
where's the right place to be on the curve?
So we think that the DMO is going to skew it more towards shorter dated issuance. Okay. So we want to sell, for instance, asset swaps at the 5-year part of the curve. That makes sense to us.
Nice to see you, Peter. Always a pleasure.
Thank you.
Peter Sheffrick, Global Macro Strategist, joining from RBC Capital Markets. Let's go from the macro to the micro. Single stocks. Joe Easton, back to you.
So these are some of the big earnings movers today, Guy. We've got Deutsche Post, as expected, declining down around 4% over in Germany. Weakness in their earnings, their profit down 15% in the last quarter. And the CEO was very downbeat when I was listening to that interview with Bloomberg earlier today. So that one coming down. Legal and General, meanwhile, a massive outflow. Assets under management down around 12% in the last quarter. So we are seeing weakness there. And the two down the bottom here, we've got AIB over in Ireland, the Irish lender, and also SCOR, the Lloyd's of London insurer. Both of these are net interest income stories, better than expected net interest income from those companies. SCOR is also benefiting from the strong reinsurance market, something that we've seen recently, given the better than expected natural catastrophe losses. So those are two big gainers this morning. In terms of London Stock Exchange, up 2.8%. The shares were sold at a discount. Around £1.9 billion worth of stock has been offloaded, but it does remove an overhang from that stock. So potentially with that removed, it's a reason to get back in, and that stock is rising 2.8% in London today. Then in terms of two morning calls, you ran through one of them earlier. That's the big one standing out. IAG, double upgraded to overweight over at JP Morgan. Now they say that British Airways still has around €500 million worth of profit to gain back post-pandemic. It still hasn't reached the post-pandemic level, and that stock has underperformed significantly recently. So they see a reason to buy that one over at JPM. We've got that. There's the UK price target. It's also listed as well in Spain. And then in terms of TUI, both of these are in travel today. So TUI upgraded over at Morgan Stanley, up 5.5%. This is all about the travel rebound, people buying more, according to the recent reports from the sector. Morgan Stanley highlighting that one. Overweight TUI up 5.5% this morning.
OK, Joe, thanks very much. The travel and leisure sector in focus for a number of reasons. Then Joe Easton from our equities team with the briefing for us of the stocks on the move. Coming up, we'll get back to the US politics story. Super Tuesday is over. We'll bring you the results as the race for the White House hits high gear. We'll have analysis. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in. I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
Why should somebody want to be in the pharmaceutical industry? Why not go into something sexy like private equity?
In the end, what we do is we create these miracles that fit in the palm of your hand, these little medicines that can transform a human being's life.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
border, the economy, and the November elections dominate the headlines, President Biden will deliver his State of the Union address. Balance of Powers, Joe Matthew and Kaylee Lyons will bring you live global coverage starting at 8:30 p.m. Eastern. Bloomberg. Context changes everything.
Of course, everybody whines and complains, oh, not these two, not again. And as that great moral philosopher, Mick Jagger, once said, you can't always get what you want. You're going to have to get used to the fact that we're going to have a rerun. And that's just the way it is.
If you're holding up your M&A transaction or other kinds of, investments because you're waiting for a signal on November 6th, day after U.S. elections, better plan on a longer time horizon before there's resolution.
Tina Fordham, the geopolitical strategist, advisor, and founder of Fordham Global Foresight, plus Larry Sabato from UVA Center for Politics on November's U.S. presidential election. Clearly missing his very famous crystal ball there. He tends to come out with a crystal ball and predicting some of these elections.
Relying on Mick Jagger instead, though, which seems just as useful.
Yeah, clearly.
You're UVA, aren't you?
I am a UVA. Okay. Yes, that was not intentional, but intentional promo.
Fully declared.
Yes, fully declared. But I did learn plenty about the elections over at UVA as well. So I think what's important to keep in mind here for a global audience, though, is that yes, we kind of knew that there was a Trump versus Biden show-off ultimately coming in the works. I think right now it's how do you price this in when policy is still kind of unclear. The only person who had a very, very, very clear policy, one that was easily able to translate into the markets, was Nikki Haley, and she might be quickly dropping out soon, or at least that's the expectation.
The issue, what I find interesting about this is that it's, if you put Haley on the ballot, you would have the polls would be easy.
Yeah.
Haley would win, you could price it in. It's going to be so close. It is going to be so, the polls suggest that nobody wants it, but it's going to be incredibly close. So we're basically going to have to wait. Right until the last minute.
And then beyond. Yeah, because if this goes to legal challenge, then we have to wait longer. We've seen that before.
We actually have a little bit of a 2000 PTSD, if we can. But there's always this piece of what happens with the congressional makeup. You get Trump in the White House potentially, but then what does Congress ultimately look like? And does that make it even harder to pass through some of this legislation? We actually had former President Donald Trump sweeping, as we mentioned, the Republican primaries, moving closer to that party's nomination. The official process, by the way, happening on July 15th for the Republican convention. But lately, he's using some of his speech to defend his previous record in office. Take a listen.
We were getting along with everybody. We were getting along and we were respected by everybody. We had no wars. Remember when I had the debate with Hillary Clinton? She said, look at him. Look at that personality. He's going to cause wars. I said, no, my personality is going to keep us out of wars. And that's what happened.
Meanwhile, President Biden, of course, dominating the Democratic contest. He is issuing a statement as well, really pointing to President Trump in particular, saying, quote, Trump is driven by grievance and grift, focused on his own revenge and retribution, not the American people. We should mention that has kind of been the pillars of his entire campaign, really positioning himself as the anti-Trump candidate when it comes to the general election. I want to get more from Bloomberg's Derek Wallbank, who is no stranger to the election play of the states. Derek, walk us through the story, this kind of dynamic between the polls of Nikki Haley would be an easy win potentially over Joe Biden, according to New York Times polling. But President Trump, then, a closer margin of victory if he indeed is elected. Derek, how do the next 12 months play out in terms of what we should be paying attention to in terms of the rhetoric around policy?
Well, yeah, I mean, this is one of the classic conundrums of American democracy, right? Is that the primaries will tell you who Republicans want to nominate and who Democrats want to nominate. And the people in the middle don't necessarily get the biggest say up and until you get to Election Day. But when it comes down to Election Day, you know, you're really talking across, in some of these swing states, maybe a conglomeration of as few as 45,000 people could be the deciding margin between these two candidates, Trump and Biden. I know that there is a large swath of the American public, based on the Super Tuesday results, you're talking maybe 20% of Democrats would rather somebody else, maybe 35% of Republicans would rather somebody else. Well, tough luck. You did say in the intro, you know, you can't always get what you want. Donald Trump likes to play that song at his rallies. So, you know, he eats that for breakfast, really. I mean, it's tough. You get down to a binary decision. And the binary decision is going to be Trump versus Biden. And so right now, you're going to sit there and you're going to see every single person who said, oh, I'd really like it to be somebody else. I'd like to do this other thing. Okay, well, if ifs and buts were candy and nuts, we'd all have a happy Christmas. But that's not what it's going to be. It's going to be Trump versus Biden. And figuring out, I'll tell you, those people who'd rather it be neither, that's going to be the voter that decides this election, and that's the voter I'm paying attention to the most of all.
Okay, given that, what does Haley do next? What does Nikki Haley do next? What does she do? What happens to her money? What happens to her nomination? What does the next 24, 48 hours look like for her?
Yeah, well, it's going to be a really tough process for Haley. You know, I had identified 5 states that I thought that she might have a chance to do well at, that if she was going to have a path forward, she'd have to do well in. She won exactly one of those in Vermont. You know, I think the state of Virginia is really instructive. Haley won in the Washington, D.C. suburbs. She won in some of the university towns like the University of Virginia, Charlottesville, that area. She won there, but nowhere else in the state. And where she didn't win, she got blown out. So the math is really hard for Haley. Trump is very close to clinching the nomination. That could happen in the next week or two, just mathematically, next at least couple weeks. So the math is really hard. What I think is interesting for Haley is how she positions herself going forward. She's really leaned in over the last couple of weeks on being a bit of a Trump critic on all of that. There is a school of thought among Republican political operatives that Nikki Haley's greatest political moment could be if Trump doesn't win this, to be the 2028 I told you so candidate.
Okay.
And so she's going to have that in the back of her mind. But the problem is, how do you square that with Trump? Because if you're disloyal to Trump and you're going against him, you don't have a base to run from in 4 years.
Derek,
so she's
thank
got
you
some
very
big
much.
decisions.
Interesting to keep that in mind then as we look ahead. But Bloomberg's Derek Wallbank, thank you. Don't miss Bloomberg's State of the Union special. That coverage kicking off at 1:30 a.m. UK time on Friday, 8:30 Eastern on Thursday night. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
This is Markets Today. We're about 30 minutes into the European trading day. Dare I say it's a fairly macro one, of course, as we are on the back of Super Tuesday, waiting for not only Powell testimony, but as well as what the UK budget looks like right here in the UK. In the meantime, on an index level, the stock 600 only higher by 0.2%. I'm seeing a little bit more volatility in bonds and FX, but right now it is a corporate story. Seeing a couple of weak earnings. DHL, for example, ASML to the upside, really pairing some of the losses from yesterday as well. It's a little bit of a micro until we get a little bit more indication on the macro.
Pretty. Let's talk about transportation, cars. We're all probably big Uber users, I imagine, and I need to do this for regulatory purposes. There are other options other than Uber.
Making some bold assumptions.
Making some definitely bold assumptions. I want to talk about the sustainability story around mass transport. Uber has set itself a goal, and it did so at the beginning of the decade, for 100% of its rides in the United States, Canada, and European cities. It basically wants to be fully electric by 2030. Now, earlier this year, Dara talks about the idea, Dara Khosrowshahi cast some doubts on maybe the ability of the firm to get here. Now the firm's, now the ride-hailing giant is basically commissioning a report. It did so with Bloomberg, NEF, New Economy Finance, identifying roadblocks, good use of words, to its drivers going electric. We're joined by Uber's Global Head of Sustainability, Thibaut Simphal, here on set. Good morning, nice to see you.
Good morning, thanks for having us.
You walked here this morning, well done.
Yeah, I walked.
Let's talk about this report. Driving the next phase of electric mobility in Europe, tools for a fully decarbonised on-demand transport industry. If you were to pull one takeaway from this report, what is it?
I think as Uber, as an industry, we want to push forward on the transition to electric cars. And we've got really bold ambitions, as you just said, and we've set ourselves some really bold targets. But if I were to pull one thing from the report, is that there are a number of obstacles in the external environment.
Yep.
And some of these are things that policymakers can do something about. And some of these obstacles are related to incentives for drivers to get electric. They're related to policymaking in cities, et cetera. So companies like us are pushing forward, but there are a number of obstacles. We need to recognize them, and that means companies like Uber need to decide what we're going to do. On our side, we decided to speed up, not slow down. But I think governments and other companies in the sector, such as automakers, also need to decide what their position is.
There has been a significant shift over the last 6 months in terms of the electrification of powertrains and consumers' desire to buy fully electric vehicles. There is all kinds of angst around this industry, be it residuals and what is happening there, be it the price of new vehicles, be it range anxiety. Consumers are pushing back. Now, if you were to target one area, one consumer of electric vehicles that probably has the greatest effect, one would argue, and this report makes this point, is that it is drivers such as Uber drivers. How do Uber drivers, other mass transport drivers, need to be treated differently in order to get the maximum bang for the buck out of the electric transition?
Yeah.
They in theory, drive the most. They therefore have the biggest impact on the environment. Should they be a special case?
Yeah, exactly. I mean, that's what the report makes clear, and that's why we wanted some really good research on this. Like, on average, an Uber driver or a high-mileage driver, if you transition their car to an electric car, has got 4 times the impact that if you and me were to have move to an electric car. That's because they drive way more. And also what we're seeing and what the report is saying is that on Uber, we're seeing Uber drivers move to electric cars 5 times faster. And that means that if policies from governments and from municipalities focus on drivers on ride-hailing platforms such as Uber and high-mileage drivers, they will have a much bigger impact on the environment.
Yep.
And because there's a rush to obviously get to our targets, but not just our targets, like the Paris Agreement targets, if you focus on high-mileage drivers such as Uber drivers, you'll have a much bigger environmental impact, favorable environmental impact. And the way the report, I think, says that should be encouraged is, one, in the form of signal from governments that gas-powered cars will be phased out, and the sooner the better. Like in countries like Norway, 4 out of 5 cars now are electric that are sold because there's a clear mandate from the government. Second is incentives to drivers, like giving subsidies to high mileage drivers. That's another way they can be treated in a different way. Third would be on charging. Like, there's still a lack of charging infrastructure in many places where high mileage drivers live. And so government, municipalities, charging operators need to get together to install chargers in the right places.
So Thibault, you've been through a number of the conclusions from the paper. Do you think then that cheaper Chinese vehicles into the European market is that part of the solution? Because there's a lot of politics around that, of course.
Sure.
But is that what you're looking for? Would that help some of the problems?
I think in general, we, as Uber, we of course welcome cheaper battery EV vehicles wherever they come from. And so we've seen a number of automakers come up with like really good models, such as the Kia Niro. And we're seeing a trend where Chinese automakers are starting to get really big in this industry. BYD has now sort of surpassed Tesla in terms of sales of electric cars. So we welcome that. That's really good. And in general, what our position is on this is we'll stay out of the geopolitics, but what we say is, if there's going to be stronger competition from automakers to make more affordable cars, that will address the number one concern that drivers have, which is the affordability of the car. And then if it's also creating a bit of a competition between China, the US, and Europe for a race to the top, which is we're going to incentivize this industry, we think that's a good thing because it's good for climate.
Right. I mean, you talked about a couple of things. The interesting thing in your first answer there, you said about subsidies for high mileage drivers. I could see that being politically difficult to deliver if you're thinking about sustainability. You'll focus on sustainability for Uber, but if we open the Overton window on the conversation a little bit, what if the solution around sustainability is fewer of your drivers on the road, fewer of any kind of driver on the road, more bicycles and infrastructure around that, and infrastructure around walking and public transport? I
understand the angle there, but Uber drivers contribute to the general transportation ecosystem, and what we've proven was what there's been a lot of research on is if you've got a good ecosystem, then people will use their cars less. The reality today is that what's creating pollution in cities is individual cars, not Uber cars. There are a very tiny minority of cars on the road in any given city. In a city like London, for example, every day there's about 15 million trips happening on mass transit, and there's about 15 million trips happening in individual cars. So for cities to focus on cars that help the general ecosystem of mass transit, ride-hailing, bicycle sharing, etc., so that people don't use their own car, but instead use that ecosystem, that's one person more that you take out of an individual car, and that's pollution that you're taking out of the environment as well. So focusing on high mileage drivers, it may not be easy to sell. I agree. It's something that the messaging needs to be clear for voters, but it's certainly something that has a really positive impact.
Uber sets the standard for the industry when it comes to pricing. Famously, it's how it built its company. If you were to go on the Uber app right now and pick Uber or Uber Electric, for example, Uber Electric charges a premium to address some of these sustainability concerns, to go green. If you're setting the standard, why not take the hit on your own margins to incentivize that?
So, a good question on pricing. We've actually thought about that one a lot, and what we've done in the past year and also is that we've moved our greener products pricing to be in line with our mainstream products. So if you open the Uber app in London today or in New York today or in Paris, Uber Green is actually at the same price as the mainstream UberX product because we don't want to send the signal that if you're using a more sustainable product, you've got to pay a premium. That's something that's very important. This is something that we've developed a consistent global approach for. In terms of using our margins, we're already doing that. Like we committed 3 years ago, to investing $800 million to help drivers make the transition to electric cars, and we're spending a lot of that money. That money is coming from our margins. So we're setting the standard in terms of pricing, but also we're setting the standard in terms of we're investing. We're not slowing down. Yes, the times are getting a bit harder, and that's true. We need to recognize that.
Yeah.
Probably linked to the cost of living crisis, high interest rates, which makes the acquisition of an expensive asset like a car difficult.
Yeah.
But we're still like pushing forward with same pricing for sustainable products as mainstream products and continuing to help drivers go electric.
But you're saying, talking about the same pricing, why not create a bigger incentive or even a discount for the EV story? Wouldn't that push your sustainability goals faster and even bring you more in line with some of the policymakers that are pushing for it?
So we're testing that in a few places. We actually have a greener product in Paris that is a little bit cheaper than our mainstream product. So we're testing different options. We've got the privilege of operating in 70 countries, 10,000 cities. So we're testing a few pricing schemes. We're testing a few different products, and we'll see what works best. Well, ultimately, what we want is to deliver a sustainable product for riders in a way that is seamless. We want earners on the platform to be happy as well. Like they need to make a good living on the platform, and we also want cities to be happy. So we've got that tension, and we overall feel like we've got the right balance now. And what we're saying, and I think what the report is saying, is we can't do it alone. Climate is a team sport, and if we're going to deliver on our really ambitious targets that we talked about earlier, we need governments to speed up. We need automakers to speed up. Because ultimately, if we don't do it together, we're not going to be able to deliver on our ambitious targets.
All right, well, we look forward to getting an update on those ambitious targets. Uber's Global Head of Sustainability, Thibaut Simphal, we thank you so much for joining the program. In the meantime, a couple of headlines that are crossing the Bloomberg terminal. This around Egypt. It looks like the Egyptian pound is slumping 10% after making a pretty big central banking announcement here. Guy, Anna, this is one that we've been watching a lot on the currency devaluation front, especially when we know that Egypt, from their
from the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From all indications, Jeremy Hunt remains very concerned about that issue around the gilt market and not wanting to repeat what happened in 2022. So where there are tax cuts, there will have to be offsetting measures to pay for them. Because unfortunately for him, unlike the autumn statement, the Office of Budget Responsibility isn't going to come along and say, "With good news, we've revised revenues up by £60 billion. It looks very much like that's not going to happen this time.
That was Elizabeth Martins from HSBC, and what to expect from the UK budget. A big focus then on tax cuts, how they're paid for, what this means for the UK government's need to borrow and how it borrows over what time horizon. Let's get more on this story. The UK spring budget, of course, due later today, just after midday. Bloomberg's Lizzie Burden is in Westminster for us. Lizzie.
Hi, Anna. Well, I'm joined by the chair of the Treasury Select Committee, Harriet Baldwin, who'll be scrutinising the Chancellor's every move. Harriet, is it responsible to be cutting taxes when we're still at 4% inflation?
Well, I do think that the budget today has got to be seen through that lens of the progress that's been made on inflation. So it's down from 11.1% at its peak down to 4%, and it's on track to get to 2%. So I think it does need to be evaluated to make sure it's not inflationary. And we'll have the Chancellor in front of our committee next week, and we can drill down into that question. So the second thing I think is, as you know, the tax takes at a very high level in the UK at the moment. That's because on the back of the 400 billion that was spent during the pandemic supporting households and businesses, and then of course the extra help of 94 billion that was given after Putin's evil invasion of Ukraine, you know, that has meant that there's been more public spending than anticipated. So you've got a high tax take, but I think what you'll hear today is the Chancellor take steps to reduce that further on top of the 2% that he cut in national insurance back in November. That came into effect on January the 6th. I think it's plausible that he'll do another 2% today.
But the Bank of England doesn't think it's responsible to cut rates yet, so why is it responsible to cut taxes?
Well, I think in terms of the national insurance cut, it does have different characteristics than a straight across the board flat rate cut in terms of other taxes. The reason it is less inflationary, and the Office for Budget Responsibility scored it as not being inflationary, is because it actually tackles one of the challenges of the UK economy, which is it attracts more people into work. So the Office for Budget Responsibility said that it would do that. It would help the supply side and the growth potential of the UK economy as well.
Yeah, on that point, in the evidence you've heard at the Treasury Select Committee, is the economic inactivity problem more attributable to financial incentives, or is it to do with ill health? Because if it's the latter, why not just spend more money on the NHS?
Well, I think it is really important to spend money on the NHS and to spend money on helping people back into work. There's been an enormous programme that's been delivered by the Department of Work and Pensions to try and do just that. And it is making progress, and it needs to make more progress. I do think it's also really important to recognise that spending on our health service is at a record high. In fact, in real terms, it's 40% higher than it was in 2010. But what you're seeing in terms of the NHS is it's not quite back to the output levels that it was delivering before the pandemic. So I think there's some work to do there in terms of helping some productivity gains. And I do think we'll hear from the Chancellor today more in terms of public sector productivity.
Okay, I also want to ask you about the fiscal rules, because there's been such a debate about them, whether they're tying the government's hands or actually too loose and it's all the work of fiscal fiction. What do you reckon?
Well, we'll have the Office for Budget Responsibility in front of us next Tuesday to ask about this latest round of forecasts. And what I would start by saying is that all forecasts are by definition always going to be wrong. But having an Office for Budget Responsibility that was set up in 2011 has actually proved to be, I think, if I paraphrase Winston Churchill, he said democracy is a terrible system, but it's better than all the other systems that have been tried. I would say the Office for Budget Responsibility has its drawbacks, but it's better than all the other approaches that have been tried, which were the Treasury doing its own forecasts, so marking its own homework, and the alternative that we saw with Kwasi Kwarteng's budget is that you deliver a budget with no Office for Budget Responsibility forecast, and that wasn't a good idea either. So I think the guardrails of the Office for Budget Responsibility do help the Chancellor, and I think that they will enable the markets to feel very confident about the progress the UK economy is making.
But as you say, its work is imperfect. Is it worth your committee asking for a Ben Bernanke style review of the OBR, like he's doing with the Bank of England?
Yeah, well, we're really keen to see the Ben Bernanke review that we asked for, and we were told we were going to see it in February. Now we're being told that we're going to see it in the quote-unquote spring, which is a kind of elastic concept. We look forward to seeing that. I think it's a really important piece of work, and it's great that he's doing it for the Bank of England. In terms of the Office for Budget Responsibility's forecast, they do a lot of self-assessment. So they've gone back and they've looked at the things they've got right, the things they've got wrong, and the reasons that things weren't correct. So it's actually, I think, pretty transparent, and they are prepared, unlike the IMF, to come in front of our committee and give evidence in public about the rationale behind their forecasts. I think it's particularly interesting to me at the moment that the Bank of England themselves have much more pessimistic forecasts about the UK economy than the Office for Budget Responsibility does. And actually the UK economy has outperformed all the pessimistic forecasts that we had this time last year. So it's not growing as fast as anyone would like, but it's certainly growing better than the forecasts were this time last year.
Indeed, and the UK is in technical recession. Just finally, how much headroom would you say the Chancellor needs to leave himself today to be fiscally credible? Is he allowed to leave a wafer-thin margin?
Well, I think what he will want to see is he will want to see that debt falling, and that's really important to show that debt falling in the 5th year of the forecast, which is the fiscal rule that he's set himself. So I'm very confident that he will show that. I think that in terms of inflation, he's got to make sure that the measures he takes aren't going to make inflation any worse. So I think the 5 pence off the price of fuel at the pump, that's really helpful because that's been extended for another year. That'll be...
It's been temporary since 2011.
It's been temporary since 2011, I know.
That's fiscal
we've
fiction,
said a lot.
isn't it?
We've said a lot about that on our committee, but we were expecting him to extend that. We didn't think it would be temporary, and we've been right on that. So I think that's going to help. That's going to keep inflation under control, and it's going to matter a lot to people filling up their cars.
Harriet Baldwin, Chair of the Treasury Select Committee. Great to have you back on Bloomberg. Back to you, Anna.
Thanks very much, Harriet Baldwin there with Lizzie Burden live in Westminster. Thank you for that conversation. For viewers in the UK, join us later for special coverage of the spring budget. That begins at 12:15 UK time. The Chancellor's speech is scheduled to start at 12:30, of course. Later today, we'll be hearing from the Chancellor once again. Bloomberg getting the chance, in fact, Lizzie Burden getting the chance to put questions to him. The Chancellor of the Exchequer speaking to us. Don't miss that conversation this evening here on Bloomberg TV. We're watching a lot of things today. We'll put up the list of what we're watching from Powell to the UK budget. Let's bring in Christine Aquino, who joins us now and can help us think about what is ahead for us today. And let's start with the UK budget then, Christine, because that is one of the things we're watching. We've had a number of views. Watch the DMO, watch what they say is required in terms of debt issuance to go alongside this budget. Watch whether he's got a wafer-thin level of headroom, to use Lizzie's terminology from that last conversation. What are you going to be watching for?
Well, Anna, I mean, I'm always going to be watching the gilt market, and all the factors are relevant to that. So definitely the gilt issue is going to be my primary concern here. And, you know, the expectation is that that issuance is going to increase this year, £258 billion expected, which is an increase from last year. What's interesting, though, is also the expectation for the mix of issuance. I think a lot of market participants thinking that the DMO is going to move towards shorter dated bonds, which makes a lot of sense if we're thinking that the Bank of England is still on a path to rate cuts. Now, this all potentially becomes a little bit more, goes a little bit more haywire if, in fact, the budget is a bit more inflationary than expected and therefore limiting the Bank of England's ability to cut rates.
You talked about the gilt market, an 11 basis point move in yesterday's session off what the expectation around this budget might actually look like. Why is it not showing up in cable here? Why are we seeing rate volatility in cable at monthly lows, but bond volatility spiking higher?
Well, I think, you know, because the budget is ultimately a fiscal event and that will have very direct implications for the gilt market, I think the pound is subject to more global factors, shall we say. That's also a factor of what's happening in the U.S. dollar and, you know, some implications for U.S. policy there. And then, of course, the comparative experience of the Fed and the Bank of England in terms of the rate outlook.
Who's going to move gilts more today, Jay Powell or Jeremy Hunt?
Well, I think Jeremy Hunt will get a first stab at moving gilts, but we might see a little bit of pushback depending on what Powell says today, of course. Though, I mean, it's going to be interesting, though, right? Because the message, again, that's expected from Powell is more of that gradualism, more of that pushback against any expectation of earlier cuts. He's managed to browbeat the market so far into finally aligning with what the guidance is from the dot plot, 75 basis points of rate cuts. Just a little bit over that for market expectations, but mostly aligned with the Fed.
We'll see whether the dots change. Dots can change. Maybe we'll get that. Will be the next thing we're going to be watching out. We've got the beige book as well. Kashkari speaking later.
Jolts you referenced ahead of the jobs report on Friday.
Absolutely. It's a busy day. It's going to get more exciting as the day progresses. It's been a great start, but it's going to get more exciting as the day progresses.
This has been exciting enough.
Precisely. This is all you need to get your day going. But the day's going to progress, and then we'll do it all again tomorrow. Christine, nice to see you. Nice to see you over here as well. Christine Aquino for our Markets Today blog. You can get more from the team on the front page of the Bloomberg UK website. You can also type in TLIV Go on the terminal as well. So that kind of wraps things up for today. But we've got some really big events coming up. Is Powell the main event today? Probably. We'll see. But I think kind of the rest of the week, I'm still building up to that payrolls number on Friday.
I don't know, I kind of want to know what happens after this UK budget, because I think it has implications for how the rest of the bond market trades. That does it for Markets Today. The Pulse is up next. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal?
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
Could face bigger challenges. Was elected.
Was going to keep Real World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The UK Chancellor Jeremy Hunt is set to put personal tax cuts at the centre of his spring budget as a general election looms. We're live in Westminster. Donald Trump and Joe Biden dominate on Super Tuesday with a rematch of the 2020 presidential election, now looking more likely than ever. Plus, markets eye 2 days of testimony from Jay Powell on Capitol Hill. The Fed chair is likely to signal there's no hurry to cut rates. So first thing is first, let's take a look at the European markets map. But frankly, a lot of things going on moving these markets. One of the signals that we're looking out for the most is also the rally in gold and Bitcoin, which are basically giving conflicting messages about the strength and risk assets in the economy. Now, if you look at stocks, but also a lot of the bonds, they're actually posting some pretty small moves. The one thing we're watching out for is that testimony from Jay Powell. And then here in the UK, watch out for any movement in sterling and, of course, gilts on the back of the Chancellor giving that budget. So it's a big day for politics on both sides of the Atlantic. We'll bring you the latest on Trump and Biden's Super Tuesday sweep with Kriti Gupta in a moment. But let's start here in the UK with Lizzie Burden. As we build up to the budget, the Chancellor expected to give workers a 2 percentage point national insurance tax cut when he delivers his spring budget this lunchtime. Now, Jeremy Hunt under pressure to present a pre-election giveaway, but will also need to raise other taxes or cut spending to do so. So, Lizzie, what are we expecting from the Chancellor? What's his rabbit out of the hat moment?
Well, as you say, Francine, this is one of Jeremy Hunt's last chances to woo the electorate before the general election. So it's going to be a distinctly political budget. We're hearing that the expectation is he'll cut national insurance again, as he did in the autumn statement. You can hear them calling for a general election here in Westminster. But if he cuts national insurance, on the one hand, the thought is that it will be cheaper than income tax, it'll be less inflationary, and it will also help to incentivize people back into work. because it only applies to people who are in jobs. However, if you give consumers back £10 billion, it's hard to imagine that it won't be, at least to some degree, inflationary, and mean that the Bank of England at least has to keep rates higher for longer, if not hike again. That seems a bit unlikely. How is he going to pay for it? One measure could be that he ends the non-DOMS loophole, which currently means 70,000 people don't have to pay tax on their overseas earnings. That would have the added benefit of stealing one of Labour's ideas. And the big question really today is, will the bond vigilantes come for Jeremy Hunt like they did for Liz Truss? The reality is, as long as he does the dance with the Office for Budget Responsibility and lets them mark his homework, it looks like the markets could be pretty quiet. But let's see if he does anything egregious today, Francine.
Yeah, and let's see if anybody out there loses their voice at Westminster. There's some, pretty enthralled singing behind you, Lizzie Burden, there in Westminster. Now, we'll speak to you in a short while. President Joe Biden, Donald Trump have also swept the Super Tuesday state primaries. Meanwhile, the former president's remaining rival, Nikki Haley, scored her second win, this time in the state of Vermont. Well, let's bring in Bloomberg's Kriti Gupta. Kriti, when you look at, this election, it feels like Americans aren't really enthralled by it, certainly not enthused by it. And it looks like we're going to see a rematch despite so many billionaires giving money to Nikki Haley.
Yeah, Fran, no protesters in here, but I'm sure there's plenty on the other side of the Atlantic. Look, this is a really kind of tricky question when we're talking about financing in particular, and that's where Nikki Haley really matters here, where she has been out front in terms of getting a lot of backing, not just from grassroots conservatives, but from major Wall Street donors as well, who think that neither President Trump or President Biden are the right fit. But I think that's the exact point of it, that if she does end up dropping, the fact that there is this kind of neither is the right fit mentality across America is really where you're starting to see the polarization, especially as it applies to right here in Europe and what the policy actually looks like. And that's the campaign rhetoric that we're expecting to kind of amp up from President Trump, who, believe it or not, has actually had a fairly reserved approach relative to his last campaign, especially when it comes to things like tariffs around what that might actually look like for Europe. In addition to China, he's already mentioned that 60%. On the Biden side, it's a different story. He's using more of the carrot mentality than the stick mentality through kind of his Inflation Reduction Act, for example, EV incentives, really trying to bring production domestic, similar to President Trump, but doing it in a very different way that is still angering some of his colleagues across the Atlantic.
Kriti, thanks so much. Kriti Gupta there with a thorough look at the elections. Now, to talk markets and how all of this plays into markets, of course, and treasuries, we're joined by Michael Straubach, Chief Investment Officer at Lombard ODA. Michael, so good to have you back and in the studio in person to talk about all of the good or bad things happening in the markets. I mean, you still believe in U.S. exceptionalism, but we worry about deficits, we worry about the cost of money, and we worry about the U.S. actually just having too much on their hands. How do you play this still U.S. exceptionalism in the markets?
By betting on the U.S.
Which is doing great.
Which is doing great. And its exceptionalism has paid off very handsomely in markets. I mean, the U.S. is leading the charts on growth, on earnings, on tech. Productivity, on growth. Doesn't seem as if much has gone wrong for the Americans, but it's more fundamental than that. U.S. assets are sort of a strong core in today's global economy. Look at Europe, quite in sort of a perilous state, also because of the geopolitical uncertainty. China has materially slowed down, and the U.S. has held up the global economy coming out of two geopolitical shocks, the pandemic and now the war, and is showing little sign of weakness. It's actually showing sign of strength as we sit here.
So what does this tell you? I mean, I guess the question is it everything priced to perfection, right? Is valuations, especially in the U.S., because of all the good news that you lay out, at peak?
Well, it's certainly not cheap, but I don't think in this market valuation plays a lot of role in investors' thoughts. I think it's more about safety. I think it's more about quality. I think it's more about sort of sustainability of earnings. There's a lot of stuff out there that is very cheap, but it just keeps getting cheaper. At some point, maybe as rates start to go down, we'll see a broadening of the rally. But for now, it's really about focusing on the winning business models. That is tech, that is global firms, monopolies that sit on enormous pools of profits, and that's very much in the U.S.
But Michael, overall, and I want to talk a little bit more about the U.S., given that we have the testimony of Jay Powell, and also given that we have a big election year. But overall, the markets, you have a record high for Bitcoin. You have gold moving in the other direction. It seems to be a little bit jarring in how the markets look at risky assets.
Yes, that's quite sort of a conundrum to think about. But Bitcoin obviously is still this speculative element that we have here. We still have a system that is full of liquidity and where people are chasing returns. Gold is quite a different story, and I think of it still as somewhat of a hedge for large investors. Maybe right now people are piling into gold to stock up in as a physical asset. I think that's what's keeping it quite high. But on average, real rates, in our view, seem to have peaked and will be under pressure to go down a bit. That's normally good for gold.
So, Michael, in the U.S., what do you buy? I don't know whether it's fixed income or actually equities. Again, we have Jay Powell speaking today and tomorrow. But then you also have this U.S. election, and it's unclear. I know we're now focusing maybe more on policies, but it's unclear what a Trump in the White House would do for the Inflation Reduction Act and regulation.
So, number one, tech is unavoidable. We like communications sector services. We like stables in the U.S. and also, to some extent, energy stocks. Trump would probably be good for that. Treasuries, absolutely. I mean, we are in an environment of very materially higher interest rates, short and long ones, than we have been used to for the last 10 years. And that is an opportunity. It's not a threat. Especially if, as maybe Mr. Powell may suggest today, that they are still on track. I think he'll be quite sort of tempered, and I don't think he's going to be seen as pivoting again in some kind of direction.
What, in terms of being more aggressive with cuts? I mean, there was always this mismatch between the market's expectations in terms of the pace and actually what central banks, wanted to do.
Yeah, look, I think the rally that we've seen since October was really sparked by a pivot. It was sparked by the fact rates have peaked, they're coming down, inflation or disinflation is here to stay. I think they need to be very, very careful at this final stage of the battle against inflation, not move too fast, not get ahead of themselves, but balancing very carefully what the labor markets are doing.
It's like Goldilocks. It has to be just right. On the UK, Michael, are you excited? I mean, this is a very important budget for the Tories because we have an election looming.
Yes.
Does it matter to the markets?
I don't think so. To me, from what I'm reading, it looks like a smaller type deal. It can be undone by whoever wins the next election, and I don't think it matters a whole lot.
Michael, thank you so much. Michael Strobeck, their Chief Investment Officer at Lombard Odier, of course, staying with us, and we'll talk a little bit about China next. Coming up, could the UK Chancellor be about to borrow policies from the opposition party to fund tax cuts? We'll get reaction from the shadow Chief Secretary to the Treasury next, and this is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere.
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't. The other one that continues to be a positive story is Deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
Supporting households and businesses, and then of course the extra help of 94 billion that was given after Putin's evil invasion of Ukraine. You know, that has meant that there's been more public spending than anticipated. So you've got a high tax take, but I think what you'll hear today is the Chancellor take steps to reduce that further on top of the 2% that he cut in national insurance back in November. That came into effect on January the 6th. I think it's plausible that he'll do another 2% today.
Harriet Baldwin, their chair of the UK's Commons Treasury Committee, speaking to Bloomberg ahead of today's budget. Now, let's stick with this story. Jeremy Hunt expected to announce a 2 percentage point cut in national insurance. There's speculation that he may borrow some of opposition Labour policies to fund it. Well, our UK correspondent Lizzie Burden joins us live from Westminster with a guest. Lizzie, over to you.
Thanks, Francine. Well, I'm joined by Labour's Darren Jones. He's Shadow Chief Secretary to the Treasury. Darren, do lower taxes mean higher growth?
Well, first of all, we in the Labour Party have said for some time that the tax burden should come down on working people, irrespective of the growth assessment, because they're higher than they have been since the Second World War. But we've also got to get the economy back onto a trajectory of growth in order for those to be sustainably funded. Now, this will be the 22nd budget from the Conservatives since they came into office in 2010. And every single time, the Tories have said they're going to grow the economy. And where are we right now? We're in the middle of a recession. That's why growth is going to be at the centre of Labour's policies coming into the general election.
But everybody wants growth, so let's be absolutely clear. If the Tories cut national insurance again today, if, as we understand, they cut income tax down the line, and are you going to maintain those pledges?
So we support taxes coming down on working people. That's why we supported them in November. Let's see what the Chancellor sets out today. Now, it's right to say that if people have got a few extra quid in their pocket that they might spend, that might stimulate some economic growth. But the fact of the matter is that when people look at their tax bill, their mortgage or their rent, the cost of their bills and how much money they've got spare at the end of each month, even with the announcements that we expect to see in the budget today, we think that people will still be worse off and the cost of living will still be a real problem for people. So the idea that that will flow through to growing the economy when it's really just helping people kind of pay the bills, I think is probably unlikely.
Indeed, but the bond market's question to Labour is how you balance the books, right? If you maintain their tax pledges, how you continue your pledges on public spending. You've already had to scale back the £28 billion pledge on the green economy. So if you match what the Tories are doing, will you have to scale back your plans even further?
Well, look, we will inherit what we inherit if we win the election this year. We're very clear that if we do win the election, it'll be the worst fiscal inheritance that any party has had since the Second World War. That's the scale of the challenge. We can't really do anything about that from opposition. It's the Tories who are responsible for that damage.
Well, you can change your own plans.
And we can start to turn things around. Our manifesto and our policies will all be fully funded and fully costed in line with Rachel Reeves' fiscal rules, which is that we will not be borrowing for day-to-day spending and we will get debt falling as the size of the economy.
But are you confident that the market will believe you can be both tax cutters and public spenders?
Well, you've got to get the balance right. One of the big questions, of course, is reform. I mean, if you look at what we're spending money on, our public services, they're in enormous need for modernisation, for reform, for efficiency savings, both to try to get the public sector budget under control, but also to improve outcomes for people across the country. So we will invest when it's prudent and responsible to do so, but reform is going to be a huge part of our agenda for public services in order to get that balance right.
OK. It's a pretty bleak picture that you've just painted us of the UK economy, but actually, lots of CEOs that Bloomberg's been talking to are actually now pretty bullish on Britain. Our economists say that we could be top of the league table of the G7 when it comes to economic growth if people keep spending their savings. Are you just talking down the economy?
No, I'm just reflecting the facts that we see in the OBR forecasts, in the economic assessment of the country. That's not to deny that we still have huge assets, huge strengths as a country, huge opportunities for the future, but we know that when we speak to investors and businesses, for example, that they can't invest or pay for the things they want to because of other policy blockers, whether it's planning reform or the energy system or the labour market or the apprenticeship levy. There's a whole package of policies there that a government ought to be taking seriously to stimulate investment and growth, and for reasons I don't really understand, the Tories are failing to do that.
And when you're having your smoked salmon and scrambled eggs offensive, wooing the city, what is it that you're promising them that you think they like?
Well, we think there are three things that we're saying to the private sector that Labour will bring. One is stability, the second is investment, and the third is reform.
Policies?
Well, the policies that flow under those themes. So stability is really important because, of course, I can't remember how many chancellors we've had now and how many times they've said tax rates are going to go up and go down. It keeps moving around because of the chaos in the Conservative Party. You will not get that from the Labour Party.
But we want specifics.
And our 5 missions, which are to grow the economy, to fix the National Health Service, to tackle crime and antisocial behaviour, to decarbonise the power sector by 2030, and to reform education and skills, will be the driving policies that will underpin that stability alongside our package of investment with the private sector and reform.
OK, Darren Jones, Shadow Chief Secretary of the Treasury. Thanks. I'm sure you'll be covering the budget for us later today. Back to you, Francine.
Lizzie, thank you so much. Lizzie Burden with Darren Jones. I will have plenty more, of course, on the UK budget. We have special coverage, plus reaction and analysis. Our coverage begins at 12:15 p.m. with the Chancellor's speech at around 12:30. You can watch that in the UK on the terminal or follow our live blog on Bloomberg.com, and we'll be joined by John Stepek and, of course, our very own Stephanie Flanders. Now, later today, we'll also be speaking to the Chancellor of the Exchequer, Jeremy Hunt. Don't miss that conversation this evening here on Bloomberg TV. Much more to come.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're
in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Why should somebody want to be in the pharmaceutical industry? Why not go into something sexy like private equity?
In the end, what we do is we create these miracles that fit in the palm of your hand, these little medicines that can transform a human being's life.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back. Now still with us, Michael Strawbeck, Chief Investment Officer at Lombard Odier. Michael, thank you so much for sticking around. We talked quite extensively about the U.S., some of the opportunities there. I don't know what you do with China. I mean, you have you're a little bit different to everyone else who says we need stimulus. You say they need to be very cautious in what kind of stimulus, and actually they should focus on stability of the currency first.
Yeah. Look, so China is in quite a precarious situation. So growth materially has slowed down, and they don't seem willing or quite sort of grabbing the challenge of that growth by stimulus right now. I think it is driven by, as you say, stability. They don't want to be seen as having overdebted situations, default situations like we've seen. And finally, and this is my thinking of China in general, China is caught in this wind of change of the fracturing world, as we call it. Obviously, they're feeling strong headwinds from the U.S. In terms of maybe support for the war in Ukraine, or at least the tacit support. But more importantly, we're in a Cold War situation between the U.S. and China on tech. And I think they're taking stock of that before they go forcefully on stimulus. So I've taken out Chinese assets from our strategic portfolios, and we will look at it from a tactical perspective only.
But Michael, so you also worry about deflation in China. Is China kind of on its own, or could it actually also impact, world inflation prices here?
It absolutely can. It may actually make the jobs slightly more easier for central banks outside China. But China into deflationary tendencies is not good in total. Maybe short term it will help a bit with the central banks, but long term for sure, China cannot end up in a deflationary scenario, which is
because they're not consuming?
They are not consuming, they're saving, and they're not stimulating.
What's your take on Europe?
Caught in between, I would say, needs to stand on its own feet. Let's see what happens in the US. If Donald Trump comes back, Europe will feel a very strong cold wind to take responsibility for its own security and defense, show more commitment to, if you will, the US as well, by the way. And ultimately, I think the US election caught in between China is really Europe's moments of truth to look ahead 10 years and get its houses in order.
Are there any tactical plays? I know I had a big Wall Street bank saying actually they've identified 7 companies that should rival the Magnificent Seven, but that the share price is just not following through because they're based in Europe.
Yeah, sure. There are. I mean, there are fantastic companies in Europe. My home country, Denmark, has fantastic companies. Switzerland, very large companies with solid business models. Any sort of investor, I think, today needs to focus on a global business model, a monopoly-like situation, strong balance sheet, and strong earnings. And there are some in Europe for sure.
Okay, Michael, thank you so much, as always, for coming on, especially coming in the studio. Michael Strawbeck, their Chief Investment Officer at Lombard Odier, with a good conversation around the world. Coming up, we'll look at London's environment for fintech startups as the city faces growing competition from Paris and New York. That is coming up shortly. Then we have a full roundup of some of the big market moves. One theme that we really want to talk on is record highs for Bitcoin and gold seem to be sending mixed messages about the appetite for risk across global markets. Now, Bitcoin has jumped 50%, of course, helped by inflows into recently minted U.S. exchange-traded funds. What that means longer term is something we need to keep an eye on. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the... This is Bloomberg.
Now, UK Chancellor Jeremy Hunt is set to put personal tax cuts at the center of his spring budget as the general election looms. Donald Trump and Joe Biden dominate on Super Tuesday with a rematch of the 2020 presidential election, now looking more likely than ever. Plus, markets eye 2 days of testimony from Jay Powell on Capitol Hill. The Fed chair is likely to signal there's no hurry to cut rates. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the new UK boss of Revolut said London's role as a fintech hub is under threat. With growing competition from Paris and New York, Francesca Corlesi has signed up to a new unicorn council to push the government on startup-friendly policies. Now, at the same time, a government-backed task force has called for investment in women-led ventures to drive the UK's ambition of becoming a tech superpower. Well, joining us now for more on all of this, on Budget Day as well, I should add, our city editor, Catherine Griffiths, and June Angelides, an investor at Samos Investments. So thank you both for joining us. Catherine, first of all, can you paint the picture of actually how, I mean, June lives this day in, day out. It's VCs, is trying to raise money, giving women a better chance. But how does it feel actually for city people?
I think it feels in some ways positive. So Revolut has this new boss in the UK, Francesca Corlesi. She herself has been a founder before. She created a digital mortgage business called Mollo, and she's taken on this really, really interesting role at Revolut, running the UK business, which is right in the spotlight of whether or not they get the banking license. And I think her kind of long experience, as she was saying, shows that London had this amazing kind of time after the financial crisis. There was this real sense that it was the place to be if you wanted to create new startup banks. And that continued for a long time. And she's still really positive about London. She's very, very European. She's worked all over the world. But she does think that in the last few years, perhaps, there's been this sense of the talent pool diluting a little bit. There's New York, you know, kind of counterintuitively, we think of New York as being this huge finance centre. But in terms of fintech, that being a more recent thing. And then, of course, on the continent too, that sense of the Macron policies, or just that sense perhaps of whether people want to be inside the Eurozone. And of course, in London, we're not.
Yeah, we're certainly not. Juno, you live this day in, day out, and I know you've called for, first of all, more investment in women entrepreneurs, but also more angel investors. What's hard? Is it the access to capital when you start out?
Yeah, access to capital is a very, very big thing. I mean, if you look at the stats last year, funding dropped significantly to female founders. But in general, the landscape is very hard. But I think a few reforms that have been put into place recently, especially around pension, hopefully will enable businesses to access a larger pool of capital. And it's great for pensioners, but the money will be put to work.
Yeah, I mean, this is the British ISA that we were talking about. Yeah. I mean, there are complexities in that. Does the Chancellor go through with it?
In a few hours, we will definitely find out. Yes, I think probably we get something on the British ISA. And while the kind of name is jazzy, actually what that will really mean is maybe a bit more complicated, because it might be things that are listed in London, but of course that can be all sorts of things all around the world. But that plus some other reforms to sort of try and move pension fund money in particular into growth assets could create some opportunities for UK fintechs and other things too.
And June, what's interesting about what you've been trying to push for is also it's actually at education level. So it's inspiring girls, in the classroom to not only have role models, but I guess to have task force that will propel them in becoming high growth entrepreneurs.
Absolutely. I think the shocking statistic was that only 81% of students were able to name a role model in tech, and they were male. And I think how do we lift that number? A big objective of the task force is to increase that number, putting more material in school, especially with Women's Month. How do we raise the profile? I think the media really helps with that.
I mean, one of the questions that we try and often discuss on the UK show is actually, what does the City of London stand for? And I know the Chancellor has always tried to push this idea that the UK can become the next NASDAQ, that actually he does want to focus on tech and entrepreneurship. But is it still insurance and banking?
Yeah, I mean, it is insurance and banking and professional services. But I think everyone can see that, the UK and London in particular is this incredible hub of talent. And that does stretch from tech to science, amazing universities, great campuses. But I think we've heard a lot of rhetoric from Jeremy Hunt, and he is pretty popular actually out there in the city, but really not a great deal of concrete action. And I think it's going to be really interesting to see how people feel about what is to come in the budget, and if indeed we do get the national insurance reduction and all the rest of it, whether actually people might prefer a bit more focus on these sorts of topics which sort of propel us into the future.
And June, I mean, you have some great statistics, right? And for example, there are some task force that this government wants to put in place. Now there's a general election. Doesn't look like they'll be around for much longer. I could be wrong, but that they really want to increase the number of female entrepreneurs. And again, how difficult is that? We have a huge labor shortage in this country. So does that accelerate things?
Yeah, I think there are a lot of great initiatives being worked on. The government has put aside quite a big, significant amount of money to increase the amount of AI talent. Minister Caulfield recently spoke about a budget being put aside to help with returnships. I think we have a large untapped talent pool with women who have left the workforce for childcare and how to get them back in. I think training them up is a great way, but we also need the corporates to play a big role in making it an inclusive environment for them to join.
I mean, the other thing, so you also focus on coding for females, and actually for a lot of mums, but also females in general. I don't know the interplay between coding and AI. Is it more necessary to have coding skills with AI, or does that get taken away?
Well, I think AI and natural language has made it a lot easier to be able to understand. And I think what we need to see going forward is just people's interest, curiosity. I think that's what excites me about coding. How do we get people to think outside the box? How do we help them to understand the power to transform their ideas and make an impact in society?
We're all a little bit obsessed with Revolut because of the banking license and what happens to this. Were you impressed by the plans going forward, or are so many still question marks?
Yeah, I think there are lots of question marks still. Revolut's been trying to get this banking license for 3 years. But I think one of the sort of interesting dynamics of that is it's become so sort of big without the banking license. It has 40 million customers around the world, 8 million of those in the UK. And of course, not all of those people are using Revolut all the time, but it's still quite a large number. And so that decision by the UK regulators about giving them the license, it's just a lot more loaded than when people get licenses when they're a bit smaller, and the stakes are not quite so high. So I think they are showing signs that they are kind of ticking off their problems. They're sort of trying to get in control of their accounts and things like that. But yes, questions still to be answered.
Catherine, you always have such a good, pulse of what the city wants. What are they expecting from the budget? I don't know whether it's a downbeat. I had a big investor in, and they were saying, like, look, the budget's fine, but they're probably not in charge in a couple of months, certainly, by the end of the year. So does it really matter to the people of the City of London?
I think that's the real challenge. I think they definitely, don't want to see anything rash. They don't want a sort of Kwarteng-style budget, and they don't expect to get one. But I think that's the problem. They don't really expect it to be a lasting thing.
June, is there anything that entrepreneurs need from the budget? Again, it's a bit precarious for this government right now.
I think in general what people are looking for is a bit more stability, just an understanding that the government is going to stick to the promise, a bit like what you've just said. How can they make plans if they're not certain about what it's going to look like in a few months from now? And back to that point of attracting talent, making the UK an attractive place so people come and they can access the talent they need to grow their businesses.
Yeah, it's a tricky, but I think it's the trickiest budget yet because they have to probably win votes. They don't have much money to play with, and they want to make sure that the markets are okay. Thank you so much for joining us today. June Angelides, investor at Samos Investments, and Bloomberg's city editor, Catherine Griffiths. Now, coming up, we're also joined by James Janoski, the global co-head of energy, power, and renewables at JP Morgan. He's live from the company's Clean Tech Stars Conference. So a good conversation on infrastructure and, of course, spending. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Wow.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Oil supplies may be running ahead of demand after a report of rising U.S. stockpiles for a 6th week in a row. Fears of slowing demand from China and surging supply from non-OPEC producers are also weighing on prices. Brent has risen by almost 7% this year due to tensions in the Middle East and higher transport costs. Now, to discuss all of this, we're joined by James Janoski, the global co-head of energy, power, and renewables at JP Morgan. He joins us from the company's Clean Tech Stars Conference, which brings together the future leaders of decarbonization. So, James, thank you so much for joining us. I mean, one of the things that we keep on asking a lot of our guests and a lot of head of commodities tell us is that we're running out of things. And this is because there had been decades of underinvestment in oil and gas, but also in renewables. Do you worry that we're running out of things?
Good morning, Francine, and thank you very much again for having me join this morning. We're hosting our 2nd annual Clean Tech Stars Conference here at our offices in London. It's focused on private EMEA companies that are at the forefront of technologies that we need to achieve global net zero by 2050. As you think about your question, am I worried about running out? What we're worried about is making sure that we can help these companies get access to capital, because we need both. We need traditional energy, but we also need low carbon, green, renewables, clean tech. And the companies we have here, we have over 45 companies, the founders and management of these companies that are in hydrogen, e-fuels, battery storage, energy efficiency, carbon capture, the technologies that we need in addition to renewables, and as we make the transition away from fossil fuels. So it's a combination.
But James, is the right investment going to the right place? So again, I understand it's a combination, but actually what are you most worried about? And then you also hear from, again, a lot of the big commodity producers that even if you go through transition and go for renewables, there's not enough copper, there's not enough of these rare earths out there to make it viable in time.
So it's a combination of, we need a few things. We need public policy and regulation to help be stimulating for investments. We need permitting to move faster, but we also need access to capital for these companies to be able to develop the resources, develop the technology, spend on the innovation. So it's a combination. It's not just one element to make the transition successful.
Who's getting it right the most? Again, how many investments or how much in terms of money, a pool of money, needs to go where?
I think what's encouraging is if we look at last year, we $1.4 trillion of capital for energy transition, decarbonization, which is a record. The challenge we have is to scale that up to the $4 to $7 trillion a year that we're going to need between now and 2050. We've had some headwinds, obviously, with high interest rate environments, energy supply shocks. We've had supply chain disruptions, permitting being a bit slow. So it hasn't stopped. It's going slower than what everyone would like. As we saw the attendance at COP28 and then even at Davos, there's a lot of momentum for this from the corporate and the private world, public. So we're confident it's going to come. We just have to have a little bit more patience as this evolves over the next few years. And this, to change the global energy ecosystem, to make sure that we have the ability to scale up the low carbon, is going to take time. It's not an overnight event.
James, I know there's a lot of focus, of course, on raising capital to go into infrastructure for renewables or infrastructure for energy. Is this where the smart money is going?
The smart money is going across, so we continue to see capital being raised across all subsectors, renewables, so solar, wind, the grids, battery storage, EVs, clean fuels, as I said, some of the more emerging technologies. Capital's continuing to go. The issue is just because of what's happened, for the reasons I said about some of the headwinds we faced last year, it's just slowed down the pace of capital coming. We went from 30 companies last year to 45 companies this year at our conference. We went from roughly 200 plus investors last year to 250 plus this year. That's, to us, quite encouraging that we continue to see companies grow, be successful, but investor interest be there from, as you said, venture capital, private equity, it's infrastructure, it's a combination. I think the other thing we're seeing is the big corporates and the big strategics are also continuing to put more and more capital into helping these clean type companies or these smaller type companies grow up so that they can scale up and also deploy their technology quicker.
James, when you look at, your basically the teams joining you at this conference today, I think you have growth companies, highly successful growth companies that raised some $7 billion of capital over the last several years. Is it easy to raise capital across the board, or is there a region that actually is more in tune to raising capital in this space?
So what we're seeing right now is it is quite challenging. I think globally, for the reasons I said, but we're starting to see the green shoots. We're starting to see the public equity capital markets open up, which is always a good thing. We've seen policy in the U.S. with IRA obviously be supportive. We've seen the UK and EU adopt new policies and new incentives and subsidies. I wouldn't say it's one specific region. What it is it comes down to companies that are able to demonstrate that they have the technology, that they're beyond the pilot phase, they're scaling up to be commercial, and that they have an end market demand, and that those companies then are able to go and say, you know what, I would like my next round, whatever that is, a C round, a D round, an E round of growth capital, because I've proven, and there is demand, there's fiscal policy around it. Those elements are really just global. So it's not one region, it's quite specific. Yeah. But overall, the fact that we saw more capital raised last year gives us a lot of encouragement, and the momentum just in the market that we see talking to clients and investors is quite encouraging.
Great, thank you so much. James Janeski there, the Global Co-Head of Energy, Power and Renewables at JP Morgan. Now coming up, as the UK Chancellor prepares to deliver his spring budget, we'll look at why gilt investors will be hoping the whole statement is actually uneventful. That's next, and this is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Just a few hours until the final UK government budget before the election, but could disappointment for voters turn out to be a bonus for gilt markets? Well, Bloomberg's markets reporter Justina Lee is with us now. I mean, the UK, this is a very important budget, frankly, for the Tories. I don't know whether it'll have a huge impact on the economy given the looming election, but what are you expecting, Justina?
Yeah, I think the biggest headline, for all of us living in the UK has already been reported out in the press, which is that everyone's expecting a cut to the national insurance tax rate. And perhaps not yet, a cut to the income tax rate. But I think that's going to be a really important part of the pitch that the Tories are going to desperately bring to UK voters ahead of a potential election. But, it's kind of a difficult kind of dilemma for Jeremy Hunt here, because on the one hand, they do kind of want to bring more perks to UK voters, but on the other, he's not working with a lot of fiscal headroom here. So we're also going to try to see where he's going to find some of that headroom, potentially by extending a windfall tax, kind of on the energy companies and kind of what he's going to do with the tobacco tax and kind of other parts of the budget.
So how is the market positioned ahead of that?
Yeah, I think kind of another big picture structural question here is there going to be more perks for kind of the UK financial industry in particular? Because obviously going into this budget, there have been a lot of concerns about the lack of listings in the UK and also the lack of domestic investment in the domestic economy. And so there have been kind of a lot of chatter about whether there's going to be a British ISA, which could bring some tax perks just specifically for investing in domestic stocks. And that could, at least in the long run, provide some support for British stocks.
Now, Justina, one of the most read stories on the Bloomberg terminal is actually Egypt and the fact that they devalued their currency. What can you tell us?
Yeah, I think it kind of all speaks to the pressures that emerging markets are under at the moment. And for Egypt, it's been particularly difficult because they've seen kind of a deficit in their current account for quite a while, and that always brings pressure to the currency. But it's also been especially hard because with the conflict in the Middle East, that's hurt kind of trade in Red Sea and revenues through the Suez Canal. And so what we kind of got from the central bank today is, a huge rate hike of 600 basis points, as well as the devaluation of the currency, which kind of will bring it a bit closer to the black market rate. And also economists are expecting potentially a deal with the IMF coming kind of very soon.
Yeah, and we heard from the IMF that they were encouraging, of course, to tighten monetary policy because inflation is around 30%.
Yeah, exactly. And I think part of that is kind of a global story, which is that with the rate hike coming out of the U.S., a lot of kind of capital has left emerging markets. And I think this is a particular kind of dire case, but it's definitely the pressure that a lot of developing countries are seeing right now.
And then just, we're watching out for China and possible new policy coming from there.
Yeah, speaking of emerging markets, right? Investors were a bit disappointed yesterday because even though the GDP target has been kind of similar, at 5%. I think a lot of people were hoping for a lot more detail about the plan to get there. And we still didn't really get a lot of that detail today. Apart from, the central bank governor saying that there could be more room for another, reserve requirement ratio cut, which is why we're seeing Chinese bonds rally today. And, also another ultra long central government bond sale to support development. But I think, people kind of are a bit skeptical after the lack of support that we've seen over the past year.
Justina, thank you so much, as always, for that wonderful markets roundup. Justina Lee. Now, another reminder for viewers in the UK, you can join us later for special coverage of the spring budget, beginning at 12:15 p.m. The Chancellor's speech is then scheduled for around 12:30. Now, later today, we'll also be talking to the Chancellor of the Exchequer. Don't miss that conversation right here this evening on Bloomberg TV. Up next, though, Bloomberg Brief with Danny Berger and Manus Krani in New York. Have a great day, everyone.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time, I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
It's a rematch. Biden-Trump appears to be as both contenders dominate on Super Tuesday.
They call it Super Tuesday for a reason. This is a big one. And they tell me, the pundits and otherwise, that there's never been one like this. There's never been anything so conclusive.
Big tech troubles weigh on equities. The focus now shifts to Jerome Powell's testimony on Capitol Hill.
And more retail results roll in. We take stock of Nordstrom, the issues of a muted outlook. We're counting down to what Jay Powell says. We'll discuss Super Tuesday. Those equities took a smack yesterday.
Yep.
Down we went, but there's a small reprieve this morning. Tech really took a smack. It wasn't just contained to the questionable Mag 2 within the Mag 7. It was a pretty battered set of souls. Up a third of 1%. Apple manages to draw some reprieve this morning. As you can see, we've also got CrowdStrike, and this stock absolutely spiked high, up 25% yesterday evening. They gave an earnings outlook, blowout earnings outlook. This is in the cybersecurity space, up 23%, excuse me, this morning. So again, it's that differential. It's the idiosyncrasies within technology that this market is beginning to divine. The NASDAQ, this is about the elasticity of this bull run in this market. Citi talk about a stretched positioning, tech being the highest stretched positioning in 3 years, being extremely extended. Keep an eye on Apple, up a half of 1% this morning. We've given back 10% since December, $300 billion worth of market cap. The ever-hopeful Brits, they're waiting to hear what Jeremy Hunt has got to say on budget day. The red box, will it have a tax cut for the middle class?
Oh, I love the red box. Such good imagery, seeing him walking into 10 Downing with with that red box. Maybe we'll even see it later today in this program. The good news about yesterday's sell-off in equities, Manus, was that your 60-40 portfolio actually worked. We bought into bonds yesterday. We dropped by about 6 basis points on your 10-year yield. Little change this morning. It wasn't just the profit taking in Apple, though. It was ISM, services, manufacturing. That data came in and it was weaker. Is bad news finally bad news yet again? It also set the dollar off. The dollar dropped dramatically on that. But today the focus shifts to Jay Powell, who will be testifying to Congress. Does he sound more like Bostic, that one and done language? Is the dot plot, as it currently stands, still appropriate? Meanwhile, Bitcoin, I mean, this thing is on fire, Manus. We went back above the 69 intraday record that had previously been set. But I should point out, it's not just Bitcoin, it is gold as well. Let me take you to the charts, because this is a rare thing. The fact that we saw both Bitcoin and gold hit simultaneous records. Now, I know I'm gonna get IBs about this, so let me just make it clear. Nominal records, not necessarily in real terms, but they both hit the record. So even if stocks are faltering, Manus, there's still risk appetite and maybe haven appetite all happening at the same time.
I think you could probably create the argument that gold was more of a champ rather than a chump, but it is about where do you want to take a little bit of protection. If we are facing such extreme, let's say, elasticity in the rally within tech, where do you want to be? Or is it that you believe that the narrative from the Fed will be that we are one and done, and that this inflation is a little bit stickier than everybody's presuming?
Yeah, or if I can just be skeptical about the whole thing, maybe it's all just momentum trading. Maybe the tech rally was all just momentum trading. Maybe gold. Maybe it's just my algos. Maybe it's just the CTA is buying and there's no real reason behind it, Manus.
Well, hopefully there's a little bit of substance behind it. One woman that we can put that question to is, of course, Remy Oluputan. She is head of multi-asset growth and income over at Schroders. You are long gold. What timing, what beautiful timing to get you on the show and kick it off. You're long gold. We're trading at these record highs. How committed are you to it, and why are you long of gold, particularly at the moment?
Yes, we are long gold, and we're glad to see it's trading at record highs. It has been a struggle, though, let's be honest. It has taken a while, but we do think that gold will continue. There is a lot of bullishness right now if you look at the price. I completely agree that the momentum is strong, but if we just look at the facts, this is the perfect scenario for gold. What we are seeing is a soft landing. We're also seeing inflation still sticky but falling. This is all the merits that gold needs. And if we get confirmation that these rate cuts will definitely happen, this allows gold perhaps to take over from the dollar as a good asset to own in the portfolio.
Well, Remy, as you say, it's about time. It's been a long time running that gold has seemed underloved. But we got a little data yesterday that seemed to tip its hat to this idea that we will get more rate cuts. The ISM data coming out yesterday, the prices paid retreated. There were some cracks in the labor portion of that. Bonds rallied as you'd expect they would. But amid all of that, we saw U.S. stocks fall. Is this bad news again, finally, or is it just an exhausted rally that didn't even care about the data?
I think it's more of an exhausted rally, and also allowing other areas to also do well. Because yesterday we did see small caps do very well, even within the market, retail stocks doing well, Bitcoin doing well. So it's time for a broadening out of the market, and that will require tech and AI related stocks to take a little bit of a breather to give space for other segments of the market to do well. So it's perhaps we can call it bad news for narrow markets and good news for market breadth.
You talk about market breadth. You say that you're modestly overweight equities. Where do you go for breadth?
Naturally, just looking at the charts, it feels like small caps, the smaller they are, the better the breadth. But we really need a catalyst. Right now, where we're getting the catalyst still is in the mega cap because the earnings are strong, but it's good to see some decent earnings in small caps. But value areas are decent as well. For example, financials, again, did quite well yesterday, despite the pullback in tech. Outside of the US, Europe is looking interesting, even other parts of Asia right now, Taiwan, Korea. There are interesting opportunities happening within the equity market outside of US tech.
Remy, we love to hear this because we have had, I don't know, man, I feel like every single guest that's come on over the past week has said US is the only game in town. So there is a bit of relief to hear someone say, actually, there are opportunities elsewhere. And if you look at the big opportunity in the US, it has long been Apple, long been the world's biggest stock. It's now lost that position to Microsoft. It lost enough market cap over the past 2 days that's equivalent to one Goldman Sachs, equivalent to one Morgan Stanley, equivalent to one Pfizer. I mean, these are huge numbers coming off the board with the loss in Apple. What does it mean from a bigger perspective if you have such a concentrated market and you have the world's biggest stock selling off?
It is a risk, and this is one of the things that investors need to really prioritize. The fact that when you have such concentrated markets, you can have such big corrections, whilst the rest of the equity universe is doing just fine. Yesterday, we had big positive moves in other areas too, but this was actually overlooked. And right now, our big call is it is a risk to overlook those areas, because the concentrated markets, the correction we have seen in Apple and Google, actually, if you look at the charts, it's just a little bit relative to how well they've done over the last 18 months. But this poses a big risk for investors' portfolios.
Remy, we're going into Powell's day one of his testimony. We were looking at the break-evens. They are incrementally higher and have been trending higher over the past couple of months. So again, we saw Bostic fly this potential kite of one cut in Q3, then a significant pause. So they're reflecting on a playbook of the 1990s, the mid-1990s, 1995. There are the 5-year break-evens. They are trending higher. This is the war that they are trying to win. With that in mind, what does Powell do today? Does he try to constrain FCON without rolling over the US economy? What is the objective of this testimony over the next 2 days?
He has to be really politically careful. In our opinion, Powell will strike a very cautious tone. First of all, emphasize that actually the Fed has done their job, in that inflation is coming back down, which is the priority. And also emphasize that to some extent financial conditions could do with loosening, and the Fed will be very data dependent. We think that the Fed will prioritize addressing Congress over financial markets over the next few days. And that is why it will be a very cautious tone. There are too many stakeholders in play for Powell over the next few days.
Yeah, it's a tightrope for him to walk. You got 5 hours to prepare yourself, Remy. We'll all prepare ourselves for it. That's about all we have time for here. So pleased you could join us this morning. Remu Alupatan of Schroders. Yes, let's get some of the other top stories that are trending on the terminal this morning. OpenAI has fired back at a lawsuit filed against it by Elon Musk. The startup used the billionaire's own emails to show he backed its plan to become a for-profit business and pushed it to raise more money. Musk's lawsuit alleged the startup had strayed from its mission and had become beholden to Microsoft. OpenAI says that Musk was lashing out after trying and failing to make the company part of Tesla.
CalPERS, the largest U.S. public pension fund, is on the hunt for a new CIO. It's looking externally after a long stretch of lackluster returns and leadership churn. Jonathan Grable, the CIO of Los Angeles County Employees Retirement Association, is said to be on the shortlist of 4 candidates.
Bloomberg has learned that the UK Chancellor of the Exchequer, Jeremy Hunt, plans to cut 2 percentage points off the national insurance tax when he unveils the budget today. That's despite Prime Minister Rishi Sunak's preference for more expensive cuts to income taxes. Stay tuned. We'll have coverage of the UK budget, plus Bloomberg's conversation with the Chancellor himself later today.
Coming up, President Biden and Trump's sweep Super Tuesday, gearing up for the rematch in November.
And later in the show, Nordstrom's is falling. It gave a muted forecasted revenue. Slowing demand is hitting its high-end stores. This is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Tomorrow, as the border, the economy, and the November elections dominate the headlines, President Biden will deliver his State of the Union address. Balance of Powers, Joe Matthew and Kaylee Lyons will bring you live global coverage starting at 8:30 p.m. Eastern. Bloomberg, context changes everything.
There was a 95% chance or better that it was going to be Biden versus Trump.
This is a landslide primary victory.
Everybody whines and complains, oh, not these two, not again.
This is unusual in that we have seen both of these men govern, and they, different countries have experienced interacting with both.
This is an opportunity for Nikki Haley to get out and say, look, the time has come for us to unify.
You're going to have to get used to the fact that we're going to have a rerun. And that's just the way it is, and people have 8 months to adjust to it.
President Biden and former President Trump dominated Super Tuesday primaries, setting up for a general election rematch. Let's bring in Bloomberg's Anne-Marie Horton, who was watching all the elections yesterday. And here we are, Anne-Marie, probably where most people expected us to be, a repeat of 2020.
Yeah, it's a pretty boring Super Tuesday in the sense that we kind of knew what the outcome was going to be. At this point, it's just waiting for them to collect the amount of delegates they need to then become their respective parties' nominees, which we could see potentially in a few weeks, especially for former President Donald Trump. One takeaway, of course, a question that everyone's asking is, what does Nikki Haley do? She was able to pick up Vermont. We need to note this is almost a token win. It's a deeply liberal state. Republicans haven't carried this state in more than 30 years, but it was her first state she won. She only won the District of Columbia. And the big question weighing on her campaign now, she's still out there fundraising. She hasn't booked any TV ads. She didn't do any events last night. They did send out a statement after when former President Donald Trump was in Mar-a-Lago. He took to the podium, talked about unity. Her team sent out a statement saying that unity is not achieved by simply claiming we're united. Today, in state after state, there remains a large block of Republican primary voters who are expressing deep concerns about Donald Trump. What she's getting at is the fact that in all of these states, some of them she's still bringing in 20, 30% of the vote. So what we can view from this data and all of the primary data is that Donald Trump has a steep battle to climb when it comes to November and making sure he gets those independents who potentially lean right to actually go out and vote for him. So the question is, what do these Haley voters do come November?
Is that where the victory for Biden and for Trump essentially taken, but where was the weakness? If you can analyze this data in any way, I mean, I know there is, Samoa is not exactly the biggest place in the world, but, he did lose. It's a tiny, tiny place. But Minnesota, there was an uncommitted vote. So Biden has some issues to contend with. If you were to weigh up what was the biggest issue for Biden and the biggest issue for Trump as you walk away from Super Tuesday.
Trump is general election electability. Can he bring in those people that he lost as well, that potentially voted him in 2016, he lost in 2020? Can he get them back? For Biden, America, Samoa aside, less than 100 people voted, but Minnesota, with the votes we have tallied now, it's almost 20% who voted.
This is the uncommitted.
These are the uncommitted votes, and it's a protest vote. And what's interesting about Minnesota is they weren't as quick to gather and prepare for this uncommitted the same way Michigan. People were out in Michigan making sure they were rallying individuals from the progressive left to vote uncommitted. Minnesota didn't have that same kind of ramp up. So it's still interesting he has 20% uncommitted there. So Biden has more work to do with some members that are his base, while Trump has more work to do with the general electorate.
Can any of that work be done and accomplished in a State of the Union tomorrow?
Well, the State of the Union is high stakes, everyone's saying, for President Biden, and I'll repeat what I said to Manis yesterday. It's less about what Biden says, and it's how he says it. The question facing Biden, the biggest question, is about his age. We saw that in our swing state poll, and we saw that a slew of polls over the weekend, most notably the New York Times. More than 60% say he is, quote, just too old to be president. So he needs to come out and give a reassuring message, and the way he does it, how he speaks, that's what everyone's going to be watching.
I think that's going to be down to how they collateralize what he says. In other words, how they disseminate what he says, not just on TV, but then how they use it on social media. And that's a big part of their plan.
It is, because viewership for the State of the Union last year was 23 million people. The Super Bowl was north of 120 million people, and they decided not to do the sit-down Super Bowl interview. So they have to get his message out from this huge State of the Union.
Well, they're on TikTok now, so they could
The
clip
campaign,
up his State
the
of the Union
campaign
and
is
put it
on TikTok. The White House is not, because if you work in the government, you cannot have TikTok on your phone.
See, the subtleties of TikTok. They just want to get Danny on board with the campaigns. Let's talk about the backers. You talk about Nikki Haley. Obviously, the Koch brothers and different people had been backing her, perhaps stepping back. But when it comes to lunch, it was a big day on Sunday, or at least a gathering. Elon Musk, we understand, met with Donald Trump. What's the significance of Musk potentially backing Trump? Because he has made some noises about the border. He said Biden's border policies amount to treason.
And when Trump was in power, he also had some, choice words for the former president as well. This would be very significant given how much money Elon Musk is worth, third richest man in the world. And Trump has a campaign donation problem. He's used a ton of money, more than $50 million, to pay his legal fees. On top of that, Biden is sitting on a massive war chest. He is trouncing him when it comes to the ability to spend money on this campaign come November. So if Elon Musk was to back Trump,
will the dollars that you spend just simply trounce your challenges at the polls in terms of what the electric thing? I mean, that is the debate, isn't it?
Well, yeah, you need a lot of money to run an election.
But 130 to 30, is it just the dollars you spend wins?
So after the money, then I think Elon Musk brings a certain level of cachet potentially for the Trump campaign, and this could potentially be, he's very vocal on Twitter. This could potentially be someone that elevates him and helps him get out the vote. But we should note at the moment, no campaign money has been sent so far from Elon Musk to former president. The New York Times just reporting that he was at this Mar-a-Lago meeting, lunch.
I wonder what they had.
See, all the excitement was outside of Super Tuesday. It wasn't the races itself. It's everything that happened around it. That's where the excitement is.
Great context, Anne-Marie, there. We're just looking at Elon Musk. He's worth $192 billion. Danny, there you go. He dropped $5 billion yesterday.
Painful.
Yeah.
Painful stuff.
I don't know how that feels to lose $5 billion.
We'll never know.
Have the 5 in the first instance would be a start. Anne-Marie Horder, making Super Tuesday come alive on your screens at 5:20 a.m. from New York with Danny and myself. She will be on for the next 3 hours. Politics at the top of Bloomberg Surveillance's agenda. Check the markets, Danny. Here we are. We're bouncing back. I mean, we got trashed yesterday in these equity markets. SPOOs were down 1%. NASDAQ was down 1.8%. The dollar drifts lower and yields ticking a little bit higher. What will Powell say today?
timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
DOJ or other authorities
could face bigger challenges next.
It was going to keep bringing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
It is Bloomberg Brief. I'm Menace Crenny alongside Danny Berger. So Wall Street, we know, is in shake-up mode. And the lady of Wall Street, it is Jane Fraser. She was at the RBC Capital Markets Forum yesterday. I mean, I think the language, to me, it's just says everything about change. There's nowhere to hide. And she says that the reorganization has gone swifter than they expected. Now, this is the kind of narrative the market wants to hear. And she was rewarded. She knew she was doing it at that Capital Markets Forum yesterday.
Yeah,
you know, very, very clearly talking about the strategy. It's ahead of course. And if you think you're going to lie low in this place, you can forget it. There you go, up 7.8% so far this year.
Well, this is a huge reorg with many folks losing their job as part of it. And this is the question. How quickly can you turn around a ship as large as Citi? Now, one of the things that she did point to was better capital markets, better environment for investment banking. And part of that is the rate cut narrative. Not to bring this back to the macro, but can banks really bank on that if we're not going to get as many cuts?
It was interesting that she drew the differential between what's happening in Europe and the challenges that they have relative to the USA. The USA just feels more on the front foot. And of course, she has just hired Vivas Raghavan from JP Morgan.
Well, contrast to that, Morgan Stanley, according to Reuters, laying off 9% of their asset management business in China. So there's definitely a regional difference when it comes to these big banks.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. Just Warner needed that.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
Later, that fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Does dominate Super Tuesday. Meanwhile, Nikki Haley manages a token victory in Vermont.
Big tech's troubles weigh on equities. Now the focus shifts to Jerome Powell's testimony on Capitol Hill.
And more retail results they roll in. We'll take you through the stock Nordstrom and the issue of a muted outlook.
So Nordstrom's drops pre-market. It was an ugly day yesterday. I'd say it was pretty amazing to see equities sell off, but even in an environment where we got bad eco data. Usually the equity bulls love that kind of stuff.
Yeah, but don't worry. The bond market's managed to rally. So maybe bonds are finally doing what they're supposed to do on a bad day in equities.
Yeah, maybe 60-40 is back. That would be exciting.
Drum roll.
But bonds aren't doing much of anything this morning. We did drop by about 6 basis points yesterday. Here you go. Little change this morning. All eyes turn to Jerome Powell and his testimony on Capitol Hill that starts today, takes us into tomorrow. Is he going to sound like Bostic? The question at the moment is the dot plot still relevant? Are we looking at something maybe more like 1 cut this year? Or maybe if you're Torsten Slok, you think it is no cuts. We had ISM data. This is what I was mentioning to Manus yesterday. ISM data that was particularly weaker than expected, especially the labor component. What does that mean for the jobs data on Friday? That sent the dollar lower. It is still weaker this morning. Euro up about 0.2% versus the dollar. We're at 108.78. Bitcoin, meanwhile, hit a new all-time record. And again, Manus, it and gold together hit a simultaneous record, which is something that's quite odd. But let me say this again, just be clear, a nominal record, because you know, Manus, someone's going to message me and say, no, on real terms, it wasn't a record. But hey, a record nonetheless.
Yeah, don't worry about the pedantic people like that. We just had Schroders on telling us that gold could usurp the dollar. Not usurp, but certainly challenge the dollar as a dominant trade. Schroders, Oli Remy Putin being long gold. We're managed to claw a little bit back, and there's a couple of names that are certainly worth focusing on. You've got CrowdStrike, cybersecurity company, nice guidance for them. The stock up 23% unchanged this morning. Roll it over and have a look at Apple, because Apple has lost 10% of its value since Christmas time, $300 billion. Is that an opportunity for you? Is that because they're just AI light relative to everybody else? Either way, these equity markets have managed to claw a little bit back. The debate is this. It's about the elasticity of this bullishness. That's how I've sort of framed it. You've got various notes talking about stretched valuations, concentration risk. Citi say we have the most extreme positioning in tech in 3 years. It's extremely extended or not. We'll discuss that with Amy Wu Silverman in just a moment. And in the United Kingdom, what will they get from Jeremy Hunt? That is the question. We're up 1/3. We're expecting some kind of a income tax, sorry, not income tax cut, a national insurance cut, and a lot of evangelizing about how to reinvigorate UK PLC equity market. Danny.
And maybe we'll get a sight of the red box later today. Manus, I do think it was quite remarkable to hear from Remy over at Schroders that there is an alternative. It's not just all about the US, that now is the time to start looking abroad, start looking at some Asian regions, maybe not China, but to look to that for your equity allocation. Because we've heard from how many people over the past week that the US is the only game in town, and that makes people feel quite uncomfortable.
But of course, our next guest has a little bit of a contra to that. She talks about the flow of money, perhaps not washing into China, and that's got a backwash effect into the United States of America.
Well, let's get to our next guest, because she's looking at what investors are anticipating. And she writes that in the post-COVID regime, the right tail is the new left tail. Basically, the biggest fear of the investor is for the upside, not the downside. Joining us now is Amy Wu-Silverman, head of derivatives strategy at RBC Capital Markets. Amy, I think this is such a brilliant way to put it, because you see it in the derivatives markets, this insatiable demand for calls, and then poof, nothing for puts. But how vulnerable does that leave this market to the downside if that's where the options buildup is?
You know, good morning, guys. Look, when you look to the left tail, there is very little demand for it. It's at historic lows. But in some ways, I feel like the girl who's cried wolf, because I've been saying this over and over. And what has the market done? It's continued to go up. So timing is always an issue in our market. I thought yesterday was interesting. We finally got a breather. What did the option markets do? Folks went in and bought more call options. That's the activity we saw across the board. And then the other thing we saw was people starting to sell puts in names like Apple, essentially saying they think that perhaps it's hit a bottom. So the sentiment continues to remain quite positive, even on days like yesterday.
All they need is one magic wand of an AI news and presentation, and we'll be off to the moon. Now, you talk about seminal events, and some of them are black swans. We don't even know what they are. There are gray swans, and you identify a clearing event as being the AI conference for NVIDIA on March the 18th. Why could that be a clearing event?
Yeah, so, you know, we've started to back test essentially how long momentum lasts in the post-COVID era, because once you get into these momentum cycles, it's very difficult to break until you get some sort of new information in the market. That could be earnings, it could be an analyst day, it could be something like this conference, which occurs on March 18th. The reason we think it's important, it's also going to be in and around options expiry. So you're going to see a lot of technical movement from options positioning anyway. And then obviously this is an opportunity, particularly for NVIDIA, to present some sort of new data. So we could either see this momentum start to flag, or it could be the beginning of an entirely new cycle, frankly.
And in the meantime, Amy, we talked about a bit about this in the break, is some of these specific names that are so loved by derivatives traders. You look at Palo Alto. I told you this, I have friends calling me up saying, hey, I've dove back into Palo Alto calls. It feels like 2021 yet again. And you've seen the volatility within Palo Alto's share price, you know, down 28% in one day. And here you go, that's that record call option for Palo Alto. Amy, does this feel like 2021 in terms of the kind of YOLO retail trader, or something different happening this time in 2024?
You know, I think it's such an interesting observation, because I kind of sit around thinking, hey, I think I've seen this movie before. And there is this retail component. Retail investors, I would say, just in their public consciousness, are much more aware of options as a toolkit. There are a number of reasons why this is true. You know, there's gamification, there's the ease of trading them. But then I would say that institutions, too, have started to hop onto what originally was a retail trade. And the third thing I would say is I think that the Bitcoin rally helps. You know, these things are actually inextricably linked. And I think the wealth creation that you are seeing in Bitcoin is fueling some of the YOLO momentum that we've seen in 2021 and we saw during May of 2020 as well.
But is that a firm base? Because you need institutional flow. I know institutional concentration risk is in tech, the flow is in tech. We get all of that. But if you have frothy retail or meme-esque flow, it's not exactly a solid pillar.
Yeah, and I would say, Manus, that there definitely is institutional money behind this.
Yeah.
You know, that has become extremely clear because it's not, first of all, if you just think about the names, there are actually a lot of high quality names this occurs to as well. You know, you could call it the Mag 4 or what have you, but you're seeing the signs as well. And the second thing is, I would just say anecdotally, you know, I speak with institutions all day long, and I can tell you that this implementation is something that they're looking at, frankly, because it's a way to keep a toe dipped in the water, and they think of options as a quick way to keep that toe dipped in the water in case they have to jump in the pool. It's an upside leverage mechanism that people are just generally more aware of, and that help you participate in that upside cycle should it occur.
Amy, you also write that investors are starting to focus on the U.S. election and the policy risk for it. Where are you seeing that?
Yeah, you know, I'd say our conversations have finally started to steer more towards elections. You know, it certainly is going to feel like the longest general election we have, but people are starting to ask about policy. So we know it's going to be Biden. We know it's going to be Trump. Great. What does that mean for sectors? What does that mean for stocks? On the Trump side, folks are looking at tariffs. They're looking at what instability it could mean for Europe. On the Biden side, they're talking about infrastructure, about IRA. And then finally, I would say financials is another focus. RBC's Financials Conference is actually going on right now, and that's a sector that tends to perform well heading into election.
Well, you made news yesterday with Jane Fraser, don't worry. It was one of the stories that we featured just a short time ago. You talk about drilling into policy. The one debate is for the bond market in terms of debt and debt issuance going into 2025 and the scale of the fiscal deficit. Are people asking you more questions now about that, and perhaps some kind of an exogenous shock in the bond market? I know it's out there, but is it being talked about?
Well, I'll answer this question by sharing one interesting statistic with you. We always measure the spread of the high quality basket of names versus the low quality basket of names. Low quality obviously having more debt, higher leverage than the high quality. That spread in terms of hedging usually trades around 5 times. It's trading around 12 times right now, Manus, which means essentially the options market is charging more of a premium to hedge your low quality names. So essentially, to answer your question, it is becoming a concern, even though you don't see it in the overall left tail. It is a concern in these stocks where there are high debt maturities and folks are charging more to hedge them. It's just an undercurrent that you don't see in the overall market.
An interesting under-the-hood observation, Amy. Great way of answering the fiscal question. That is Amy Wu Silverman, RBC Capital Markets. Day 2 of their forum continues today. What more news can we get from that? Coming up, we're going to go back to retail. Nordstrom, fools, sluggish demand, high-end stores under pressure. We speak to Dana Telsey of Telsey Advisory Group in just a moment on retail.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. and then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's Bloomberg Brief. I'm Manus Rennie with Danny Berger in New York. So Nordstrom falling after the retailer forecasted muted revenue due to slow demand in its high-end stores while reporting growth at its discount rack stores. Let's make sense of it all. We have Dana Telsey, our CEO, Chief Research Officer over at Telsey Advisory Group. Good morning. Good to see you.
Good morning. Nice to see you.
So Nordstrom getting a bit of a smack, down 10% in this market. I think it sort of tells us very clearly, it reinforces another rivet in the narrative of high-end pressure, lower to mid-range. The consumer is becoming more discerning and not trading down, trading judiciously.
They are trading judiciously. They are looking for value. When you think about Nordstrom's results overall, you saw that the rack business, which is the off-price business, was up nearly 15%. It's the full-line business that was pressured. And in both areas, you saw beauty do well. In almost every single retailer, beauty is what's performing category-wise. But keep in mind, the guidance at Nordstrom kind of bracketed consensus, and it's going to be a margin-pressured year in 2024.
On this idea of beauty doing well, because in Macy's, they of course said, oh, we're going to focus more not just on Bloomingdale's, but Bluemercury too. Target, they want to do more in-store partnerships with Ulta. Is this, I mean, this is the thing that horrifies me, those 13-year-olds on TikTok who have a 10-step beauty care routine. So is this the kind of growth area, the bet that this is here on out, again, if you have preteens and tweens who have decided they need 10 different types of skincare to function every day?
You said it. It is skincare that is attracting all the teenagers lately. But yes, beauty is what's working. There's newness out there. Keep in mind, you had the pandemic when people focused on skincare. Now they're focusing on color cosmetics. So Ulta's going to be reporting shortly. We look for good things out of Ulta with the read across from Sephora and all the different retailers talking about the outperformance of beauty.
The one thing that you also observe, and we're going to see more of this in the Macy's Bloomingdale's transformation, closing stores, upscaling, building out the Bloomingdale brand, which is a beautiful store next door to the office here. But you also talk about this transformation within Ralph Lauren. So there is an era of transformation to come. Or where would you describe that bricks and mortar transformation process at the moment? And how does it play out to allocating in the sector?
Bricks and mortar matters. I think the focus of bricks and mortar with digital, it's not a nice to have, a must have. And the reason why, the experience of shopping, people want that experience, whether it's for socialization or whether it's for the clarity of the offering that you're getting. And what you've seen happen is during the pandemic, a lot of retailers closed a number of stores. So now their base is optimized, and look what you have now. You have new formats coming up, whether it's a smaller Abercrombie & Fitch store, whether it's a Ralph Lauren store that's more compelling. And if anything, the physical engagement, also the functionality with buy online, pick up in store, return to store, it's what matters. So I think we're seeing retailers invest in their physical footprint. Talk about Nordstrom yesterday. They announced the opening of 22 racks. When you think about Macy's, they're expanding Bluemercury, they're expanding Bloomingdale's. With 500 full-line Macy's stores, I've always heard that 50% of their sales come from 150 of the full-line Macy's. So your best stores are your most productive stores.
But at the same time, you have someone like Target saying that they're also going to focus on, or they're going to start this paid membership program, which does feel more about online shopping. Because I was looking at it, you get unlimited, this sounds like an ad, but you get unlimited free same-day delivery for orders over $35 in as little as 1 hour, no delivery fees, 2-day free shipping. I mean, delivered in as little as 1 hour, I mean, that's faster than an Amazon Prime. Is that something that kind of the idea is that it coexists and the pie is big enough, or do they directly want to eat into Amazon's business?
I think the pie is big enough, but everyone wants to eat into Amazon's business. I don't think there's any retailer that said, oh no, I want to give it up to Amazon.
Right.
I think they all want their fair share and more.
If we look at this retail reporting season so far, and we talk about the high end, the low end, rack is going to improve. So we're trading down a little bit. When you look at lows, that tells me something else about what's going on with disposable incomes. We're coming to the end of the COVID money, and that is going to either be some kind of a cliff moment in retail or a slow drift. What do you think the implications are of savings rates dropping and the end, as we understand it, of the COVID monster bank accounts?
Well, a couple things you've had happen. We have seen the consumer being more discerning and more cautious in their spending. They've spent on services more than goods. Look at the effect of travel that's been out there. When you think about the savings rate, which is 3.8%, think about the fact that you have a job market and a labor market that's very strong, and you're being able to see wage growth now outpace inflation. I think the consumer is going to continue to be discerning. I think it's incumbent upon the retailers to deliver innovation and value in order to drive demand.
Can I ask, Manus and I had a little bit of fun with Dior's Birkenstock. You're writing about a closed-toe silhouette exceeding sandals. What is going on with Birkenstock? From Dior to closed-toed shoes, where are my classic, comfortable but kind of ugly Birkenstocks that you just wear around, lounging around? I mean, what?
Practicality.
Yeah, exactly.
They're there also. One of the things that Birkenstock has done, for those U.S. consumers that own a Birkenstock, on average, they own 3.6 pairs.
Wow.
And with the full price sales that they're getting and the carefully controlled distribution that they have, keep in mind, they only have 5 Birkenstock stores that are directly owned and controlled by Birkenstock. There's a path for growth. And what it's doing by doing the collaborations, you're attracting a wider audience. So you're going to have your regular Birkenstock customer, and you're going to have your new Birkenstock customer that's drawing appeal.
Yeah, Manus still hasn't bought me my Dior Birkenstocks. I'm quite heartbroken about it, actually.
Danny is that new customer. We had Nancy Tengler in the seat the other day, and what I'm wondering is your opinion on this. Walmart is something that she's owned for a very, very long time, okay? And she's been committed to it for many years.
Yeah.
But she identifies Walmart as being the smart leader in the pack when it comes to AI. Now, I know everybody's got to have an AI kind of evangelist moment. How does AI come alive in retail? It'll have my data, I get that. But take it beyond that. I understand they've got my data and they can market to me, but where will AI as an overlay within retail mean something to you?
So I can't wait to see what it develops into. And I think we're in the early innings of the forefront of companies investing in it and seeing the benefit. I think retailers are first learning. What it should be able to do, help you manage your inventory because you're going to better understand what your company, what your consumer wants. So you're manufacturing the right thing, not the wrong thing. And also I think efficiency in operations in order to basically be able to share how should you either manage the store, labor hours in the store. I think it's going to be able to be predictive selling, but operationally too. And we're not there yet in seeing what the opportunity is. I think 3 years from now, we're going to be at the beginning of it. I think it's a learning curve all the way with that technology, but adoption has to be there. It's not a nice to have, it's a must have.
I mean, you're talking more sort of about the operational side, which I think is interesting because as a consumer, you immediately think, okay, it's going to be bots selling clothes. But, I mean, maybe not that. But you talk about how the drive is to smaller stores, that more personalized experience when you go in. So is AI an anathema to that? Do you see stores pushing that and then having to pull back, saying, actually, people want that human-to-human in-store experience?
Well, they're going to get that human-to-human in-store experience because that personalization, when you're texting or emailing, you're going to be able to see that, okay, I'm going to bring them in at this particular time. Appointment shopping hasn't gone away, and I think it continues. But it's appointment shopping with your friends and the sales associate at the same time.
That sounds like a lovely Sunday out. I love that. Dana, thank you so much for joining us. Really appreciate your time. That's Dana Telsey of Telsey Advisory Group. Manus.
Yep, coming up, we're going to take a look at some of the market-moving events that set the agenda for the rest of the day. There is only one moment in time. It is Powell's testimony.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Wow.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
It's Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day this Wednesday. Here's a look at what's ahead. UK Chancellor of the Exchequer Jeremy Hunt delivers his budget speech in Parliament at 7:30 a.m. New York time. Then Fed Chair Jerome Powell, it's the big one. He'll testify before the House Financial Services Committee at 10 a.m. Eastern. Then we'll get the Beige Book of Economic Conditions released at 2 p.m. Plus remarks from Neil Kashkari and Mary Daly. And Manus, we are on watch if any of the Fed speakers, especially Jay Powell, hint that maybe the dot plot as it stands is no longer relevant.
Well, you know, we wax and wane on this dot plot, don't we? Between it is something you absolutely set your clock by. By the way, it would only take 2 people to move the dots a little bit lower, Danny, and we'd be down in the 50s, 55, 60 basis points of cuts. This is what we got for you on the equity side. Pre-market, JD.com, reporting better than expected rise in revenue, adjusting its production lineup and cutting prices for the cost conscious. That's a thing that's come through. We just had that conversation on retail. Now, CrowdStrike, we've been checking this through the past hour, up 23%. The cybersecurity company guiding higher. And then Marathon Digital rises. You got that Bitcoin hitting a record, and all boats are rising within crypto world at the moment. Danny.
And I think that's so interesting that Amy Wu Silverman told us that because Bitcoin is rallying, it gives traders more firepower, specifically retail traders, to jump into these call bets. And that's part of why we've seen this thing where things like, you know, Palo Alto, Apple even, are seeing this huge call option interest around it.
Danny's friends are calling her, they're buying call options on Palo Alto.
Always
There's Bitcoin up 5%. Also keep an eye on gold and those that side of the business. We've had Schroders with us this morning. Gold rises. Remy Ali Putin is long gold and still committed to the trade.
Yep, and says maybe it takes the place of the dollar in your portfolio. All right, that's it for us. Surveillance up ahead.
operating in a very volatile environment. So JetBlue has a very large presence here in New York.
and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
When you have a productivity surge like we are having right now, you can have the economy continue to be fairly strong while
from the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I want it to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Talking about unity that is just not there within the Republican Party. She didn't have any campaign events last night. She didn't come out to speak. The question is whether or not she will remain in this race. She did win one state, we should note. Obviously, we knew what the Super Tuesday was going to be. It was anticlimactic. It's Trump and Biden. Both of them are set by the end of the month to shore this up. But Nikki Haley did win one state, which shows Trump still has work to do ahead of November.
Here's the reporting for the Wall Street Journal. Just drop in. Nikki Haley plans to suspend her Republican presidential primary bid in a speech. Bramo later this morning.
Which some people have been waiting for. The key question now is, will she endorse Donald Trump for president? Because if she doesn't, does that create a problem for him, given the fact that he's having trouble swaying some of the moderate voters?
This would create a problem for him. And interesting, that's what she's going to be doing today, because to encompass the entire Republican Party. You know, if you look at some of these numbers, he is still losing 20, 30, even 40% in some states to Nikki Haley. To encompass the entire Republican Party, he needs to bring in some of those either fiscally conservative individuals, more moderate Republicans. So I imagine he is going to want her endorsement. Notably, last night, he didn't mention her name. He pivoted directly to Biden in the presidential election.
If you are just joining us, hardly a shocker. Hearing from the Wall Street Journal right now, according to people familiar with her plans, speaking to the Journal, Nikki Haley plans to suspend her Republican presidential primary bid in a speech later on this morning. More on that a little bit later. If you are just joining us looking for some price action, this is what it looks like on the S&P 500. Equity futures on the S&P positive by around about 1/3%. Into the bond market, yields yesterday lower. This morning, a little bit higher by not even a basis point, 4.1584 on a 10-year. Coming up this hour, Liz Ann Sonders at Charles Schwab as mega cap tech slumps ahead of Chairman Powell's first day on Capitol Hill. We'll catch up with Greg Valliere of AGF Investments as Donald Trump absolutely dominates Super Tuesday and Nikki Haley heads to the exit. And Lena Miller of China Beigebook as the country looks to defend a lofty 5% growth target. We begin with our top story. Markets bracing for day one of Chair Powell testimony on Capitol Hill. And US equities looking to bounce back after a sell-off across mega cap tech. Liz Ann Sonders at Charles Schwab warning to diversify from the Mag 7, saying, quote, yes, the stocks are overowned and richly valued, but all or nothing makes less sense than periodic rebalancing in the interest of keeping concentration risk in your own portfolios at bay. There is a wide array of stocks stealthily performing better this year. Liz Ann, I'm pleased to say, joins us here in New York. Liz Ann, it's been way too long since we've done this in person.
I don't think we even heard the word COVID the last time I was sitting here with you guys. So I am so happy to be here.
And we're happy to leave that in the past as
Yes.
well. Let's talk about the market in front of us. Tech has been absolutely dominating. We've seen some weakness start to appear in the so-called Mag 7. What's the signal you're taking away from the recent price action?
Well, I've been saying that, yes, it's a bull market, but it maybe more of a duck market, you know, the old Michael Caine line of, you know, calm on the surface and, you know, paddling like the Dickens underneath. And there has been a lot of churn underneath, but you've had these interesting breakouts in areas that have been outside the sort of dominant conversation, like industrials, even within financials. And it's not really just a large to small. I just think that there are a lot of investors and there's a lot of money that seems to be itching to find opportunities outside of those dominant names, which aren't as dominant anymore. They're not even the 7 largest stocks anymore. Tesla's been leapfrogged.
Tesla got hit. The likes of Apple have been hit. The moves you're seeing elsewhere, is it sufficient to support the index, given the weightings?
It's a start. If we have to remember, if you go back to October of 2022, not last October, but, you know, the low, that was a week, a day marked by the indexes taking out their prior June lows. And memories are short, but that the indexes were weighed down by many of the same names that supported the indexes on the way up. But that October low in 2022, you had much improved breadth under the surface. And that's not a bad thing to see. You know, the whole general soldiers analogy, even if some of the generals have kind of moved away from the front, if you've got more soldiers moving up. I still think you want to stay up in quality, particularly smaller, less well-capitalized companies. The zombies companies are at the mercy of what goes on with interest rates, obviously. But I think it's all else equals a decent sign for the market.
Yesterday was fascinating to me. As John said, in some ways, the week started at 10 a.m. when we got ISM services, and it came out. Headline number, weaker than expected. And bonds bid, stock sold off. This is bad news is bad news. And that seems to be a new dynamic. Do you think that right now, the best case for stocks might be the Fed not cutting rates because the economy is just too strong and they can keep zipping along?
Well, I think you're probably right, and that's not a prospective thing. That, to some degree, is what has happened. This notion that the market has been solely moving based on the prospects for Fed cutting, yet we've gone through this pattern of taking March off the table, maybe even taking May off the table, shrinking the rate cuts down to 3 or so, consistent with the Fed. I'm not sure that the market isn't still over its skis with regard to that. But I think you might be right. There's the nuance of more significant weakness, especially if it shows up in things like employment, which we'll have to see what Friday brings, but you certainly saw it in the isms.
We came into this week asking, what's the most important thing? It's a big week on many fronts. We get the State of the Union on Thursday. We get the jobs report on Friday, a host of talk from Jay Powell. Jim Caron of Morgan Stanley came out yesterday with a paper where he said fiscal policy is likely to be more important than monetary policy, and explained why he likes stocks because of the fiscal kind of push to stocks, but doesn't like bonds because that's going to be hammered by some of the growth and some of the price to perfection kinds of aspects. Do you agree that really it is the fiscal that's driving a lot of the growth right now and the future upside to some of the equities?
I would maybe replace a lot with some. So I think the fiscal impulse is there, but I wouldn't give it an extraordinarily high amount of credit for the strength in the economy. I think it's the labor market. Of course, just consumption is 68% of GDP, so that's going to be the big driver. I think what's most important this week is not the jobs report from a headline perspective, but the innards of the jobs report. To your point, Lisa, the metrics like hours worked, the differential between the establishment survey and the household survey, what you pick up in the household survey in terms of, full-time versus part-time. Is it more part-time for economic reasons? The labor force participation rate. So I think it's, fine-tooth comb analysis time in terms of a lot of these data points.
This is what Constant Hunter of Macro Policy was talking about just yesterday. Hours worked, hours worked. If you want a sneak peek at the payroll survey here at Bloomberg, still 200K, the median estimate in our survey at the headline number. Do you imagine, Bramo, that comes in a little bit going into Friday after that read yesterday?
This is the confusion. Some people say it's a head fake. You can't trust one data point. Other people saying expect hours to actually tick upward because it was a seasonal issue back in January. So, I've read reports basically that are completely at odds and that basically leave me no the wiser.
Lizanne, it's been amazing to see. The last jobs report was 353, which is just absolutely ridiculous. Repriced the Fed aggressively, equity markets held up. I'm going to build on Lisa's question. Are we basically overestimating, or have we overdone the importance of monetary policy to this equity market, given what's developed in the last 2 months?
Maybe, but I think, first of all, I think the Fed's in a little bit of a pickle here. They're trying to sort of nuance things around long and variable lags. I thought it was interesting when, not so much the last FOMC meeting and the press conference, but the subsequent 60 Minutes interview when Powell, instead of emphasizing rates of change like the 3-month change in inflation or the 6-month, he cited the 12-month change. And that might have been a more quantitative way to say, we're not ready yet. We want to give this a little bit more time. And in the case of, core PCE and core CPI on a 12-month change basis, they're not anywhere near the Fed's target. And with the 3-month and 6-month having hooked up back again, you've got the likelihood of that 12-month turning back up.
What would you expect from him today? I always sort of frame this as a grilling on Capitol Hill. Then I have to remember that sometimes it's not. And it's just hours and hours of political testimony from lawmakers. The
soapboxes are everywhere. And, you put a microphone in front of them. And, you as an observer, you think, is there a question anywhere? Anywhere in here, is there a question? So, and, given that it's in advance of the jobs report, it's in advance of next week's CPI, PPI, I don't expect anything to be terribly market moving, but I wouldn't be surprised if, assuming it gets to the part where they ask them questions, they'll probably bring politics into the mix and ask about the election.
Well, what I find interesting is that both you have Republicans and Democrats kind of pushing for rate cuts, actually, more aggressively, for different reasons and in different ways. And at the same time, they're trying to message inflation. So we're going to get another kind of 60-minute speech from him, where he basically comes out and says, people are feeling pain. I understand that pain. We're being disciplined. Or does he come out and say, look, the market conditions actually do matter, and we're taking that into effect, which is essentially what a lot of people want to hear?
I think market conditions matter, but one of the things that Powell has emphasized, less so recently, but I remember I attended that sort of infamous lunch that he did, I think it was in December of 2018 at the Economic Club of New York. And it was what everybody focused on was that he backpedaled from what he had said in September of that year. But he specifically said something I thought was more interesting, which is essentially the Fed's job is not to step in because of financial market volatility. If it threatens financial system stability, that's something different. But I think he tried to squash the notion of the Fed put simply specific to, say, the stock market going down. Again, unless it starts to be a concern about the financial system and or its plumbing. So it'll be interesting to see if he makes any comments of that ilk today.
Lizanne, it's great to have you with us. You're going to stick with us. The brilliant Lizanne Saunders there of Charles Schwab. Just to get you up to speed on some news. So the Wall Street Journal moments ago reporting that Nikki Haley plans to suspend her Republican presidential primary bid in a speech later on this morning. Just confirming here at Bloomberg, Anne-Marie, we will get those remarks in Charleston at 10 a.m. Eastern Time.
Reading through this Wall Street Journal report, Jonathan, though, Haley won't announce an endorsement Wednesday, so she's going to still stay on the sidelines. But it is important for Trump that she drops out because she's still bringing in campaign money, and he wants to make sure that money comes to him. When you look at November, the war chest that President Biden is able to amass versus Donald Trump, and he's using a lot of this money to pay off his legal fees, with her out of the race, that potentially loosens up some of these donors to pivot to him, and he can really start to ramp up.
Greg Valliere of AGF Investments joining us on this story in just a couple of minutes' time. Equity futures right now on the S&P positive by 1/3%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. President Joe Biden and Republican frontrunner Donald Trump, even more clearly now, are set for a rematch in the general election after the pair swept Super Tuesday primary polls. GOP challenger Nikki Haley managed only a token victory in Vermont overnight, leaving former President Trump with the lion's share of Republican delegates. And as you were saying, the Wall Street Journal did report that Haley plans to suspend her campaign in a speech later this morning, making that tie-up even more clear. Bloomberg has learned that the UK Chancellor of the Exchequer, Jeremy Hunt, plans to cut 2 percentage points off the national insurance tax when he unveils his budget today. That's despite Prime Minister Rishi Sunak's preference for more expensive cuts to income tax. Now, Hunt's going to deliver his budget statement later in this morning. Morgan Stanley has laid off about 9% of its asset management business unit in China. That's according to Reuters. The headcount reductions are said to have started in December. They'll impact only about 15 employees, but China's economy has been facing multiple headwinds, from the real estate slump to geopolitical tensions. All of that means that there's pressure on its markets and its $3.8 trillion fund sector. That's your Bloomberg Brief. John.
Danny, thank you. Coming up next on this program, Donald Trump absolutely dominating on Super Tuesday.
They call it Super Tuesday for a reason. This is a big one. This was an amazing night, an amazing day.
That conversation up next, live from New York City this morning. Good morning.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Tomorrow, as the border, the economy, and the November elections dominate the headlines, President Biden will deliver his State of the Union address. Balance of Powers, Joe Matthew and Kaylee Lyons will bring you live global coverage starting at 8:30 p.m. Eastern. Bloomberg, context changes everything.
Chairman Powell coming up a little bit later this morning. Here are the scores for you. On the S&P 500, equity futures positive by 0.4%, yields higher by almost a basis point, 416 on a 10-year. Under surveillance this morning, Donald Trump absolutely dominating on Super Tuesday.
They call it Super Tuesday for a reason. This is a big one. This was an amazing night, an amazing day. We have a great Republican Party with tremendous talent. And we want to have unity, and we're going to have unity. And we have no choice because November 5th, it's right around the corner, November 5th is going to go down as the single most important day in the history of our country.
Here's the latest this morning. Nikki Haley expected to exit the race for the GOP nomination after a dominating performance once again from the former president. The Wall Street Journal first to report the news. Bloomberg reporting Haley will make remarks from Charleston, South Carolina at 10 a.m. Eastern Time. Greg Valliere of AGF Investments joins us right now. Greg, that news dropping just moments ago, hardly a surprise. Your thoughts, sir?
Yeah, I thought it was going to come this week, so it isn't not a big surprise, John. I think the big story now is, well, we want to see if she endorses Trump or not. I think she won't, or it'll be very tepid. The other big story, though, is the State of the Union address on Thursday night. I think Joe Biden really needs to hit the ball out of the park. If he stumbles, if he gets his words wrong, it would be disastrous. This is his big chance to be in front of a huge audience, and he needs to show that he still is viable as a candidate.
Trump began February with $30 million on hand. The Biden campaign north of $130 million. Yeah. With Nikki Haley dropping out, do her donors flock to the former president?
They could, Anne-Marie. I think there are two big factors that Trump has to worry about. One is money. Is he going to raid the Republican coffers for his legal fees? The other is abortion. I think it's been underemphasized. You look at what's happened in the last few months in states like Kansas, Ohio. The public thinks the Republicans are too strident on abortion. And if they don't change their tune, that could be a real albatross for Trump.
What we heard from Haley last night, she didn't come out and speak, but her campaign put out a statement saying that unity is not achieved by simply claiming it. This was a rebuttal to what the former president said at Mar-a-Lago. She has a point when it comes to when you look at the percentage of individuals who are still voting for her. In some states, it's 40% that she's getting the Republican primary vote. How does Trump close that gap in November?
I would guess that a Trump emissary in the next few days will go to her and say, what do you want? What can we do? And I think issues like abortion, a lot of issues for suburban moderates will be on the table. Maybe a cabinet position, although I don't see her doing that. I think that she will have a list of things that she wants.
If she doesn't endorse Donald Trump, how do you view his performance yesterday in terms of spinning forward to what his biggest challenge is going to be in the general?
Well, he hasn't really defined much, has he? I mean, I'm not sure what his position is on the Middle East, on Israel and Gaza. He hasn't said anything. So that's another opportunity for Biden, who frankly I think is actually a little underrated right now. I think Biden could go right to Trump and say, what is your prescription on Obamacare? He wants to kill Obamacare. What do you want to replace it with? There are all of these things that Trump has just talked about generally. He's going to have to get pinned down at some point.
Terry Haynes came out and sort of some of his thoughts from yesterday and said, honestly, it's not just that it's going to be a rerun of what we've seen before. We've known that. What it is that we're going to see probably a split Congress, and what we're probably going to get is no fiscal right sizing, no 2017 tax law permanence, no relief from overweening performative regulators. Do you agree that this is essentially the takeaway at a time where people are increasingly talking about all of these issues and whether we could see a shift at the White House?
Well, that's possible, and I think the markets, as we all know, like gridlock from time to time. So I don't totally rule that out. But an awful lot depends on the Senate, and we saw still another change last night with Kirsten Sinema announcing she's not going to seek re-election, and I'm not positive that the Senate will be totally inept. They might get some things done. I don't rule out the Republicans taking over the Senate.
Hey, Greg, wonderful to hear your thoughts. Greg Valier there of AGF Investments, waiting for that address from Nikki Haley a little bit later this morning in Charleston, South Carolina. Liz Ann Sanders and Charles Schwab with us. Brahma, you know how this works. I apologize to our guests because we're about to talk about politics. But I'm going to talk about markets. We had double-digit losses year-to-date on Tesla, double-digit losses year-to-date on Apple. A piece of that puzzle is China, and a piece of that China puzzle is potentially rising nationalism in the mainland. How complicated is life going to become for multinationals, given what may happen later this year?
Well, and it's not just Tesla and Apple, but Alphabet has been dragged down. It's, 2 days ago I looked through a closing basis, and all three of those were ranked in the bottom quintile of year-to-date performance in terms of the S&P 500. So I think it really does depend. And it's not just are you a domestic company versus a multinational company? It's very much that tie to China, either from a sourcing perspective or from a customer perspective. And you guys know I don't cover individual stocks, but I think that's one of the reasons for the speed with which companies are shifting their attention, especially to places like India.
We also had ADM come out and basically say the chip that they produced to basically get around the export controls actually will not get the license to go to China. Whether or not it is Biden or Trump, I'll come back to politics. Do you think the direction of travel is the same when it comes to Beijing and Washington?
Well, the rhetoric coming out of Trump and the campaign has been even more aggressiveness on tariffs, and I think that further divides the world into the multipolar structure that seems to be underway anyway as it relates to other things, including the wars going on and to some degree the de-dollarization, not de-dollarization broadly, but some of the de-dollarization of oil and the fact that oil is being transacted in currencies other than the dollar. And I think that just adds to that story of a very different world order.
What do you think Trump trade volume 2 is? How different is it? Is it small caps, long small caps, because of the fate of multinationals, the difficulties elsewhere?
60% tariffs across the board. I think that's obviously to the detriment of smaller companies that don't have the ability to be as nimble and shift, whether it's sourcing or manufacturing. I mean, a lot of that has been underway anyway, but I wouldn't generalize and just say small caps. To use my fine-tooth comb analogy again, I think looking at individual stocks these days, you got to have that fine-tooth comb to see.
Lisa wants to know if it's short treasuries, basically. Liz Truss moment in the treasury market.
Well, this is essentially the question, right? Can the U.S. face that because it's the reserve currency to the world? And so when you talk about de-dollarization, does that give enough kind of pressure? Right, but then you say of oil, so then we're not looking at a head of lettuce and seeing whether it's going to, okay.
Liz Ann, this was great. It's awesome to see you. I can't believe it's been so long.
See you guys too.
Subhadra Japa came in the studio from SocGen a couple of months ago, and she said, I haven't seen you for 4 years. And I was like, I've seen you every month for the last 4 years. It just feels so odd. Liz Ann, it's great to see you. Thank you.
Thank you.
Coming up next on this program, we'll talk China. Leland Miller of China Beige-Berg, as China looks to defend lofty goals for growth. That conversation just around the corner. Equity futures on the S&P 500. They are positive. We're positive a third of 1%. From New York, this is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
The day really picks up a little bit later this morning. Chairman Powell, Volume 1 onto Volume 2. Onto tomorrow. Equity futures going into it. The scores look like this. Equities up 0.4% on the S&P, up 0.7% on the Nasdaq. That is a bounce back after 2 days of losses on the S&P. The biggest one-day slide going back to the middle of last month on the S&P 500. On the Nasdaq, the biggest one-day drop since the end of January. Tesla hitting discretionary. Apple hitting tech. China coming out with a growth target that hardly anyone believed in. In the bond market, yields were already a little bit lower. Lower again after we got the ISM. And I think the ISM is the real news yesterday morning, 10 a.m. Eastern time. The ISM did not confirm the January boom. Yields lower across the curve, Lisa. 456.40 this morning on a 2-year.
And yes, it was the headline disappointing, but more than that, it was the employment component, as you mentioned before, going into contractionary territory, and the prices paid component actually coming in less hot than expected. So it's basically the two-pronged approach. Maybe there's weakness under the hood, and oh yeah, maybe the inflation pop that we saw in the previous CPI and PPI was kind of a blip.
That's the bond market. Let's just turn to FX and a little sprinkle of commodities too. Had a few people reach out to me yesterday saying, why aren't you talking about gold? Are you secretly buying some? So the answer is no. But gold is at an all-time high and printed another all-time high, Lisa, a little bit earlier in the session.
And this really goes to this question of what is the implication for monetary policy, right? Is there this idea that they're going to be cutting rates and then you could get some more value in non-interest-bearing commodities? Is that some of the idea here? Or is it that inflation is going to pick back up? Because frankly, the Fed is going to cut rates more aggressively than perhaps the market is suggesting. I don't know, take your pick. Maybe it's because it's a Bitcoin alternative.
That's gold. I want to finish on sterling, 127.21. That currency pair is positive by 0.1%. So that's a slightly stronger pound right now against the US dollar. Later on this morning, 7:15 Eastern time. If you are in the United Kingdom, we're going to hand over programming from here in New York. We'll hand it over to London. The brilliant Francine Lacroix is going to give you a budget program at 7:15 Eastern time. Everyone outside of the UK is stuck with us. We're going to talk about everything else, including the chairman of the Federal Reserve. Under surveillance this morning, investors are waiting day one of Chair Powell's testimony on Capitol Hill. Powell begins in front of the House, where markets are expecting a less dovish message ahead of the Fed meeting later this month. The ADP employment data coming at 8:15 Eastern time, ahead of Powell's testimony at 10 o'clock. Then Chair Powell heads to the Senate tomorrow before the US payrolls report on Friday. We touched on this briefly, Lisa. Will that data confirm the boom or not? And will it give the chairman of this Federal Reserve a little bit more space to breathe?
I like that you point straight to the data and you don't talk about what Jay Powell is going to actually say, because that's how de-emphasized he feels right now to pretty much everyone who says he's going to come out, try to just say words, not really say much of anything, and then we're going to all look to the data. That ultimately is going to be the question, though. Do we see the weakness that the ISM data seem to suggest transpire, or do we see another 300 some print? And oh yeah, what about the revisions? And oh yeah, what about hours worked? Are people working more hours, which means that essentially all those fears that companies are cutting back little bits around the edges not to have to lay people off is kind of, I don't know, fiction?
And he's got to face down some Democrats in that room tomorrow who have written him a letter. writing a letter saying, we want rate cuts and we want them yesterday.
And they've been talking about this, Jonathan, since January. They wanted rate cuts, and they're talking about housing costs and how this is weighing on the everyday American consumer and how the Fed is behind because they should be cutting. You know, I look at what Patrick McHenry, though, Republican North Carolina, chair of the House Financial Services, he said the biggest thing before the Fed is not a quarter point this way or that way, but this larger view of capital for bigger banks. So the Democrats are going to hone in on housing costs and what's hitting everyday Americans with these rate hikes, and then Republicans are going to go to capital rules on the big banks. We pretty much know what the politicians are going to say, and I think for Jay Powell, he's just going to try to not make news.
Hey, prepare for the politics. We're going to be talking about shrinkflation, corporate price gouging, corporate greed, all of those things. Is that coming up?
What does he say? Is he going to say, can I give you a lesson on inflation the way that I see it? You know, actually give me the next half hour and roll out some sort of PowerPoint.
I would love that.
You know, it would be, you know, just really, let me explain to you how monetary policy works. People, you know, et cetera, et cetera. Maybe we'll get that.
Shrinkflation is going to be one of the big topics, not so much today or tomorrow, but tomorrow evening, Thursday evening. Biden, I think, is really going to hone in. He did it yesterday when he was talking about credit card fees. He's going to hone in on this is the problem for big companies. Their price gouging, their shrinkflation. Yes, we know you're still feeling inflation, but it's not my fault.
Wasn't he talking about the Cookie Monster as well? Did you see that too? I'm not going to go there. Let's talk about the BOJ. Japan's biggest bank is preparing for the BOJ to hike rates and exit negative territory on March 19th. The call from MUFG coming as markets are still pricing in about a 50% chance of a hike. The bank's head of global markets making the bet and expecting the bank to hike yet again by October at the latest. The compare and contrast is always striking, Bramo. We're talking about cuts in America. Still waiting for the first hike from the BOJ.
Yeah, so that they can get all the way up to 0.25% by October. That's the goal, and that's what some people are saying. In order to do that, you got to start now because it's really going to be a tough slog to get there. So that's essentially the argument here. They're in a world of their own. What I think has been taken off the table is the tail risk that they're going to do this somehow rapidly because that doesn't happen over with the Bank of Japan. And either way, it doesn't seem like markets are expecting or girding for any kind of extreme action.
I know you know this, but let's snark. This is a multi-decade effort. I know you know this, but I do think this is an important moment for Japanese authorities.
I think it's an incredibly important moment, and I think it explains why people have the confidence to go into Japanese equities. I think it's important to frame just how ludicrous it is that we're talking about raising rates from negative to not negative, right? This is what we're talking about. But taking a step back, this is an amazing and pivotal moment that I think a lot of people are recognizing with new dynamism in a country that was left behind and really had a lot of forgotten decades.
I mean, I'm with you, and I'm the worst for snark anyway, so we'll park that there. You know, I know. China pushing back on doubt. Amid skepticism, the country saying its 5% growth target is attainable through, quote, vigorous effort. That's according to a top Chinese official speaking on the sidelines of the National People's Congress. China Facebook CEO Lena Miller calling the number useless, saying this: 5% is a completely useless number for markets to toil with, largely because hitting it is almost totally incompatible with what else they're promising to do, all of which pushes against the notion that they will prioritize much stronger growth. The government's GDP growth target of 5% makes us dumber on China, not more informed. Leland, I'm pleased to say, is with us right now. Leland, let's get straight to it. I think the obvious question, and the one you can help us with, I hope, what is the purpose of a GDP target in Xi's China?
There used to be a purpose, which was setting a goal for output, and then the government would, juice the economy. It would grow the economy, then juice the economy to hit that target. The GDP target no longer has a real purpose anymore. It's just a relic that they're having a hard time getting away from. I think the reality behind the scenes is that they are envisioning a world, as we've been talking about for the past 10 years on your show, that is going to go from 6 to 5 to 4 to 3 to probably to 2 and 1, very low levels of growth. They can't articulate this. They don't know what to do with that. That doesn't mean they're going to change their economic plans. They are gearing for a slower, hopefully healthier economy going forward, but they don't know how to articulate that, and they don't know what the signal is to send to foreign investors. So they put out this ridiculous number that is totally incompatible with everything else they're saying, and they say, just here it is. Make of this what you want. We don't really care anymore.
Leland, some people are saying that it indicates some sort of panic or some sort of desperation or some sort of frustration on the part of the People's Congress of China. Do you agree with those types of assessments?
No, I think it's the exact opposite. I think the major problem that foreign analysts are having right now is that they misunderstand. They see what's going on. They're like, oh, she must be panicking. He must be approaching his pain threshold. Why doesn't he do more? The lesson here is they don't think things are all that bad. Yes, the economy didn't recover great last year. Yes, growth is no longer going to be anywhere near the the old targets. Yes, they're not going to use the old stimulus playbook. They don't want to. Their focus is elsewhere. So the real problem that markets have to get around to on China is understanding that we're in a new paradigm. The leadership's economic priorities are completely different, and they are not all that disappointed with the level of growth right now and with the level of economic activity. They want to avoid a doom loop of confidence. They don't want the bottom to fall out, but they're not concerned about the levels of growth.
Which raises a question of how much they actually want international involvement in their economy. We talked about yesterday Apple and Tesla and some of the disappointing deliveries during the beginning of the year, and we were wondering, is this because of domestic pushes to buy more domestic rather than in the U.S., or is this just real weakness among a consumer base that's really faced a lot of struggles in China?
Probably both, but a lot of it is the former. This is yet more policy incoherence. They have a message that they're welcoming foreign investment, but at the same time they're cracking down on foreign firms. They're very explicitly saying we need to rely less on foreign supply chains and on foreign inputs. So let's build more ourselves domestically. So it's just an incoherence in the message, and I think you combine that with a weak economy, and everyone's scratching their head. What's happening? What's happening? But if you listen to what they've been saying for several years now, it's very clear what's going on. Yes, you have a weak economy, but they're also trying to be less reliant on U.S. goods, and they're trying to minimize, the impact of Apple and others in their economy.
You say the biggest mistake China watchers make is that she is panicking. You say this is not at all what it is, but if she was to be panicking, what would we see then?
I think at some point you have a situation where the economy falls apart, and you expect bigger stimulus. If you look at what happened in the stock market, they got to the point where they don't really care what happens in the stock market, but they also don't want the stock market to fall so precipitously that it creates this doom loop, and it affects in a big way the wider economy, which is normally uncorrelated with the stock market. So I think they'll step in order to set a floor. If they ever thought they went into real panic and they thought things were a true mess and they had a real capital outflow crisis, then I think you'd see more louder, hard-hitting support, but we're nowhere near there right now. I think that's the important takeaway.
Leonard, I just want to probe a few pieces of some of the things you've said. You've talked about them being comfortable with the current growth trajectory, yet at the same time in the last year, they suspended reporting youth unemployment. You talk about that comfort with the equity market, at the same time going into the big holiday over in China. They were banning net selling at the start of the session and at the end of the session. Is that incompatible with your views?
No, it just shows there's more incoherence. I mean, net selling is banned not just in China, but anywhere when markets get panicky. And so this was one of the times the market kept falling and falling. They brought the national team in for the stock market. It kept falling. They said, okay, we got to do a little bit more, because if the bottom falls out, then we've got a real problem and people may think the economy is falling apart. So they stepped in with bigger measures to boost confidence in the stock market. But I think, again, the rule of the day is they want to do just enough to keep things going. They're not trying to juice things. They don't care about investor returns. They don't want to return to high levels of growth or even medium levels of growth. They want to continue to restructure the economy, minimize external reliance, build up a domestic chip ecosystem, focus on national security priorities, all these things that are really important to Xi now. They're not worried about the old priorities, and they're just trying to muddle through as best they can without having the floor fall out. And that's the level of support we're going to see going forward.
What you're saying paints a pretty bleak picture, in my view, for certainly an international investor. No big stimulus coming, no real emphasis on growth, and not a clear message in terms of what they really want with international investors. So from a U.S. perspective, is China uninvestable?
No, we get this all the time. I don't think it's uninvestable per se, but I think that the old days of investing in the stock market, closing your eyes and just sort of checking back every quarter as you cashed out your dividends on the big tech giants, those days are obviously over. If you have a line of business that can operate in China, it is compatible with the government's goals, and they need your expertise, or they need your company, then you could do okay, and China fine going forward. There's a lot of companies that still do. But generally speaking, the lure of China was this idea that there's, you know, 1 billion plus consumers, and that if you sell anything in China, you're going to make a lot of money. That was never true. It was always sold as sort of a marketing theme, and now it's clearly blown apart, that entire thesis. So, got to be very, very careful if you're investing in China right now.
So well said. Leland, you're one of the absolute best at this, and we appreciate your time this morning. Thank you, sir. Leland Miller of the China Beige Book. Speaking of a trade, we're up by more than 12% from the lows of early February on a CSI 300. If I was in that trade and I was listening to that, I feel a little bit more uncomfortable after that conversation.
Because a trade means you've got to have an eye on the exit. And what he's just saying is, if there's no bazooka coming, what's the next catalyst for some sort of upside swing?
Stocks here stateside doing okay. Let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Goldman Sachs is zeroing in on the Middle East, Europe, and Africa as it builds out its private banking operations for the world's wealthy. A senior executive at Goldman says the bank recently hired at least 6 private wealth advisors in the region from rivals, including JP Morgan Chase, Credit Suisse, and Rothschild & Company. Goldman Sachs plans to keep looking outside the company for more advisors. Nordstrom lower in the pre-market by about 10%, forecasting muted revenue and comparable sales growth at its high-end stores. Nordstrom sees revenue for the fiscal year between -1% to 2%, and it's planning further investment in its digital strategy and its discount rack stores, which has an improving outlook that outpaced expectations. Senator Bob Menendez has been indicted again in connection with an ongoing bribery case. Federal prosecutors added obstruction of justice charges to existing criminal counts against Menendez and his wife. Many Democrats have called on the New Jersey senator to step down after he was initially indicted last September. Meanwhile, independent Arizona Senator Kristen Sinema has announced she won't run for a second term. Her decision ends the possibility of a turbulent race in one of the nation's most politically competitive states. That's your Bloomberg Brief, John.
Danny, thank you. Big market day. Every single time I've done a market check so far this morning, Lisa's been laughing at me every time I've said biggest one-day loss since middle of February because we're down only 1%. Here's the stat from Allegra Catelli here at Bloomberg. We've not had a 2% drop or more in a single day since February 2023, the longest run without such a pullback in 6 years.
Yesterday, when I was looking at the returns after the close, I thought to myself, is this a dip? Because it's going to be viable. Does it count as a dip? And what we're learning this morning is, yep, it is.
That's why 1% pullback is drama, Bramo, these days.
Ah, such drama. Love it.
Stocks are better today, up a third of 1%. Up next on the program, Chair Powell on Capitol Hill.
If they cut, there's going to be complaints, and if they don't cut, there's going to be complaints. If they don't go by June, it's going to be a lot harder for them to start cutting.
That conversation up next, live from New York City. This is Bloomberg.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? Are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Next week, Bloomberg brings you the latest from China's annual National People's Congress, including China's budget plans, economic outlook, and geopolitical tensions. Coverage begins next week on Bloomberg. Context changes everything.
Live from New York City. We won't go there. I'm not even going to tell you what Carl's talking about. We'll get to Carl in a moment, though, on the Fed chair.
I got the finger.
On Fed chair Jay Powell.
The forefinger.
Not who he thinks might be the Fed chair in the future. Equity futures right now on the S&P positive by 1/3 of 1%. It's not Bramo or me or Anne-Marie or TK for that matter. Yields higher by a single basis point on a 10-year, 4.16. Under surveillance this morning, Chair Powell on Capitol Hill.
So there definitely is a political, I think, a part of this, and that's one of the reasons why Jay Powell sort of, I think, laid the groundwork for cuts way back in December. But as you know, if they cut, there's going to be complaints, and if they don't cut, there's going to be complaints. If they don't go by June, it's going to be a lot harder for them to start cutting.
Here's the latest this morning. Fed Chair Jay Powell facing Congress for round one on Capitol Hill. This ahead of Friday's jobs report. Carl Riccadonna of BNP Paribas expecting payrolls to rise by 220,000 due to, quote, an underlying acceleration and broadening out of job growth in the more cyclical sectors. The median estimate in our survey here at Bloomberg calling for a print of 200K. Carl, I'm pleased to say, is with us around the table in New York. Carl, good morning to you.
Good morning.
Let's start with Powell, then we get to payrolls, because
Sure.
I find that cyclical broadening out fascinating.
Sure.
What are you expecting to hear from him with that in mind?
Well, we have to remember when Powell is testifying on Capitol Hill at these semi-annual events, he's speaking on behalf of the broader committee, so it's not his opinion that necessarily he could express in the press conference. It is him testifying on behalf of the broader committee. And I think that, we've been in an exceptional period recently where everyone is singing out of the same hymnal at the Fed. The Waller speech, "What's the rush?" I think is the best summary of kind of what the Fed is thinking, and everyone is saying there's no hurry to start moving, but it does seem appropriate to start moving sometime relatively soon. Maybe not with an aggressive cutting campaign. This is not the economy rolling into recession, but a more gradual recalibration of policy. If I could just put one point around that.
Of course.
Right. Last week, we saw the PCE deflator data. Headline PCE deflator, which is the Fed's target, has gone from above 7 to now rounding to 2. So we're not at 2. We can't say mission accomplished, but we are getting much closer to target, which means that the monetary policy prescription that was in place at 7 is not appropriate when you're basically rounding towards your target. And so a recalibration is appropriate at some point.
I'm itching to get to payrolls, you know that, so let's talk about it. End of last year, this is how people talked about the jobs market in America. Payrolls growth was okay, but it was coming from fewer and fewer industries. We were talking about narrowing breadth. Now you're talking about the broadening of job growth in the more cyclical sectors. Where is that change coming from?
So the change is coming from a very interesting point, which is the collective improvement of animal spirits in the economy. So this is, we try to put a price tag on fiscal stimulus or Fed action or whatnot. If collectively we step back from where we are, let's say Thanksgiving weekend of last year, where 10-year treasuries were flirting with 5%, stocks have a negative tone, and people are still very much in the recession camp and concerned about consumers, student loan payments, et cetera. If we step back from that and everyone says, wait a minute, maybe recession risks are materially lower and we're too conservative in our expectations and plans for CapEx spending, business fixed investment, and also headcount for 2024, all of a sudden that collective improvement in mood can have a very powerful consequence. And we can see that in those more cyclical sectors, going from net job loss in October, a little positive in November, more positive in December, much better in January. There seems to be an improvement in CEO, CFO, hiring manager sentiment, which is contributing to this kind of cyclical reacceleration in the pace of job growth, and also improving forecasts for economic growth in 2024.
I can hear the voices in my head, not all of them, but the ones that are saying.
We are live, Bramo.
The ones that are saying.
Let's break this down. What are they telling you?
The ones that are saying.
Dr. Carl wants a check.
But what about hours worked? I'm just going to keep going. Hours worked going down because people don't want to get rid of labor and they want to keep it in play. What about what we got from ISM Services yesterday? Doesn't that indicate some sort of softening?
ISM Services are still in expansionary territory, so it tells you things are okay. I think if we look at the manufacturing ISM, more broadly, not focusing on one single month, we can see that there's a bit of an inventory cycle starting to improve, and broader kind of demand improvement in the economy, where I think the manufacturing sector will look better in 2024 than it did in 2023. And so you see some sense of improving momentum. You can even see it in kind of the tracking forecast for economic growth that the consensus forecasts are tracking to a faster pace of growth. Not to say the economy is going to grow faster this year relative to last year, but there are elements of this improvement.
We've buried the lead. You've changed your view. You came out overnight, you came out in your latest report basically saying you pushed back your expectations for the first rate cut, drum roll, to June from May, and that you actually think that the Fed's going to cut less this year, now 100 basis points versus 150 basis points prior.
Right.
How big of a shift is this? Does this matter from an economic perspective in terms of a steeper drop-off later on, or is this basically just the new normal?
This is a very different kind of economic cycle where it looks like recession risks have faded. Now, you can never say it's zero. There's always some element of some unknown event that could disrupt the economy, and so there has to be some kind of lower level of recession assessment. But going from 6 to 4 cuts, I think, is more of the kind of Fed's reaction function to what we're seeing in the data. You mentioned the hours work being down. I think there was a big disruption in January, which I hate to be the economist playing weatherman, but in January and February, you get to put that hat on occasionally. We can see that there were weather disruptions in the labor data in January, and so I think hours worked, the length of the work week, those sorts of things will spring back when we see the Friday jobs number. But this is a very different Fed cycle because it's a recalibration of policy. So if we're looking for a parallel, 94 with Alan Greenspan is kind of the best example where, okay, inflation is coming down. There's some sort of productivity improvement happening in the economy. We don't know in real time the full extent of that, but we can see that it's improving. There seems to be a labor supply shock that really boosted the economy last year in the back half and probably is carrying over to some degree into the first part of this year. And so the Fed has the luxury of moving slowly, but nonetheless, as I highlighted to John, the inflation numbers have improved materially, so you can start recalibrating policy to ensure that you have a soft landing for the economy.
30 seconds left, so super tight if you can. It's a challenge for you, I know, Carl. Let's finish on this. There was a comment from Chairman Powell at the end of January when he said, we don't look at strong growth as a problem. That predated a jobs report. Is he still saying that now?
I think he is still saying that because there's evidence of this labor supply shock. There's some sort of supply shock in the economy, and when we start pulling back the layers of the onion, it seems to be a labor supply shock. And so, if you're, he is a product of the 1980s. The 1980s was, supply side economics, and because of these dynamics, right, where you had very strong growth in the back half of last year, but you had inflation coming down. That's the fingerprints of a supply shock. And so in that type of environment, you can maybe not ignore, but dial back your concern about above trend growth and just focus on inflation doing what it needs to do, which January aside, it has been doing that.
That was about 30. Carl, it's good to see you. Great to catch up, buddy. Great to catch up as always. Carl Recordano there of BNP Paribas looking ahead to Fed Chair Jay Powell, Volume 1. You okay, Bramo?
I'm great.
What are they saying to you?
They're saying...
Sell stocks, short credit, Liz Truss in the Treasury market.
Lettuce.
Something like that. Eric Friedman of US Bank Asset Management up next. Bloomberg's Michael Shepard joining us too. Kelsey Barrow of JP Morgan Asset Management. All of that in the next hour.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
If there's a concern about equities, it's just that they have gone much further ahead.
Equity markets will reshape to accommodate the demands of increased participation.
I think there's enough positive catalysts to potentially keep the market going.
The economic excitement that's coming out, I think, is another reason to get excited about stocks now. It's really the earnings that we expect to do the heavy lifting.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
I'm not sure what's happening. Nouri Rabini's constructive. Lisa's hearing bullish voices. It's all going down from New York City this morning. Good morning. For our audience worldwide, this is Bloomberg Surveillance. Your equity market's doing okay, up 1/3% on the S&P 500 following yesterday's losses. It's all about Chairman Powell in front of the House a little bit later on this morning. Then Lisa, onto the Senate tomorrow.
And will he be able to say anything at all that's new? Because we've heard from a lot of the Fed members repeatedly. And so there's really a question of, is it really going to be about him? You asked a question earlier this morning, and I thought it was a fascinating one. Are we seeing monetary policy and the Federal Reserve seriously de-emphasized in a market that's moving on and not necessarily seeing risk appetite tied so closely to Fed policy?
Purely from an observational point of view, from my perspective, just look at the price action so far this year. We've priced out so many cuts. We've pushed back the timing, reduced the magnitude. Equity markets still ripped, still rallied, and still done okay, even when the likes of Apple has been terrible. The likes of Tesla has been even worse. And Google, we know their struggles. They continue to struggle.
The why of this is fascinating to me because so many guests have come on and not given the same answer to the why, which is the reason why I hear voices, but it's also the reason why I thought that Jim Caron at Morgan Stanley was so interesting when he came out yesterday and said fiscal policy is more important than monetary policy right now, and that fiscal policy is the driver of a lot of the reason why people have spending cash, of why companies are still chugging along and will be supportive going into the election. That, I think, is an increasing tone that I'm hearing during a week of an incredible amount of economic but also political news.
So you'll get the view on the economy from Chairman Powell a little bit later this morning. Then tomorrow evening at about 8 p.m. Eastern Time, you'll hear from the President of the United States in the State of the Union address. And now, if he didn't know before, he now knows for sure. He's going to be facing off Donald Trump because all of the reports from the media organization stateside this morning, AMA suggesting Nikki Haley is heading to that exit.
Yep, she's out, and at 10 a.m. she's going to announce it herself in her home state. I mean, it was a long shot bid anyway, given the fact that she was running against basically a quasi-incumbent. The next question, of course, if we were just constantly asking when is she going to drop out, the next question is she going to endorse the former president? The former president wants to get a handle on some of those donors that's been backing her, because this is where he has a huge disadvantage to President Joe Biden.
Yeah, you're on top of it. It's money. fundraising. Biden's absolutely dominated the fundraising. Nikki Haley's been attracting a lot of financial support over the last few months. I think it begs the question. She heads to the exit. Does he get the money now, or does that money stay on the sidelines?
It's a great question, because when you saw some big donors, some fiscal conservatives, individuals who say we are never Trump, but we are staunchly conservatives, back out. They say they still want Nikki Haley to succeed, but they're not going to push their money there. So they're putting their money down the ballot. I think a lot of it depends who Trump picks as his VP. Can any of these big donors get behind a vice presidential candidate they like? But just to remind you of these numbers, Trump began February $30 million. Biden, $130 million. It is a massive war chest that this campaign is going to be put to use in 7 key swing states.
We're going to be parsing through all of the details of this for the next however many months, which I'm sure everyone's super excited about. But what I find fascinating is what Harry Haynes said in terms of the takeaways from yesterday, which is that you're probably going to get a split Congress, and you're going to get no fiscal right sizing, no 2017 tax law permanence, and no relief from what he calls overweighting performative regulators. What does this mean in terms of what we get with mergers and acquisitions, what we get for a potential premium in the debt markets, and for potential tax overhangs that people are looking for? Honestly, that is what I'm focused on at a time where we're trying to shift to, okay, well, what's the trade here?
You're only focused on the second point. I know you are. And you've been talking about it, and you're right too, and we're going to continue talking about it, by the way. The prospect of having a repeat of what happened in the UK, that you have a leader that comes into power that has some lofty goals about producing economic growth at a time when maybe we don't need it.
Well, and if you can't get tax law permanence to that point, you can't have that offset to some of the proposals with respect to tariffs, with respect to some of the spending. That's the rub. And that's where you start to get maybe a question of a bond market rebelling. But everyone's been writing in to tell me that I'm ridiculous with Liz Truss, because it's completely different, and the U.S. is the reserve currency to the world, and I understand and recognize that. Thank you.
They have the privilege of behaving recklessly for now, but that can always change. Brahma, we'll keep asking, okay, just for you. Equities right now on the S&P positive a third of 1%, a massive day ahead stateside for financial markets worldwide. It starts with Chairman Powell later on this morning, carries on tomorrow, then goes into payrolls on Friday. Stocks are doing okay. Yields are a little bit higher, up by almost a basis point, 415.84 on a US 10-year. Coming up this hour, Eric Friedman of US Bank Asset Management, with big tech pulling stocks lower. Bloomberg's Michael Shepard as Nikki Haley exits the GOP race. And Kelsey Barrow of JP Morgan with Fed Chair Jay Powell's testimony a few hours away. We begin with our top story, a trio of tech heavyweights hitting turbulence and raising big questions about tech valuations. Eric Friedman of US Bank Asset Management writing this: we do not view domestic dynamics as bubbly. We see this as constrained supply meeting more stage demand. As prospective AI buyers evaluate applications for their businesses, we continue to let winners run and favor domestic equities over international. Eric's with us around a table in New York. Eric, good to see you.
Great to be here, John.
Before we get to domestic versus international, I want to talk about letting winners run. What winners? Which ones? The ones from last year or the ones that continue to run this year?
Yeah, I think the ones from last year. And so far, if you look at the broadening out, it's been more muted in terms of that broadening out effect. But certainly we are seeing more than just tech and consumer discretionary work well. So that's certainly a positive. But our viewpoint is that the AI phase is not really a, let's call it a bubblicious environment. Again, maybe it's tainted somewhat from my time in San Francisco during the 99-2000 run-up. But this is a matter of companies wanting to get involved, but just not really having the access that they need. So again, we think that tech is still a momentum play, but one that we would still be involved with.
Others agree with you. Bank of America say there's little sign of euphoria. I think Goldman Sachs said tech valuations were backed by fundamentals, but within the Mag 7, we're seeing it break down. We saw two of them yesterday really struggle, the likes of Tesla, the likes of Apple as well. What do you make of that leadership shift within the Mag 7 itself?
Yeah, I think it's important to gauge, and I think if anything is positive, there is some differentiation. And in terms of what we're really gauging, if you will, on the forward view is what happens with AI spend. So cyber and AI spend are things that we track pretty significantly in terms of our bottoms-up research, and it's still there. There's obviously a backlog. You're seeing a increased flare out, if you will, of other chip companies getting involved, and so that for us is a positive. So I think if you start to see again that sort of lights on, lights off, everything is up, everything is down at the same time, that would be more negative. The fact that there is some more differentiation is at least from our perspective a mild positive.
Is the differentiation with respect to artificial intelligence revenue streams, or is it largely due to China and just how much exposure some of these companies have.
Yeah, I think that's key, Lisa. If you look at the Chinese story in particular, right now, if you look at the data that we're actually getting, it's actually more muted, not just the fundamentals, but also the breadth of data you get. So looking at individual companies, that's become a much more important part of our data process. Less either private surveys or even official Chinese surveys. So that feed through has been important, and certainly there's a slowdown. We do think that China runs the risk of throwing the old playbook at the problem. We've been underweight, which has been beneficial for the last couple of months, but certainly the last 6 weeks it's been a bit more challenging. So,
is there a message in this that you can spin forward? John's been talking about multinationals and how in general there's sort of a struggle, especially if you count on international revenues from the likes of China. Are you playing that theme through other sectors other than just the big tech behemoths?
Yeah, we are. I think if you look at a couple of subsectors where it's been really important, one has been global retail. And if you look at some of the value add, if you will, from even the European retailers and also some of the larger domestic ones, we, of course, have had a lot of earnings in the last couple of weeks, and we have more to follow. But I think that the read-through, if you will, is that the consumer is now looking for value. And that, to us, is maybe some indication that there's a differentiation across middle income as well as lower income consumers. So the fact you're starting to see maybe those aspirational buyers step back a bit, not just get into brands that they want to get into persistently, but also brands that maybe they're priced out of. That suggests there's maybe a little bit of a slowdown for lower income consumers, which could be a bit of a tell for our macro view.
When it comes to China, there's been a lot of talk as these are trades, not investments. Is there anything that China could do that would change your mind on being underweight?
Yeah, Anne Marie, I think it's something where, structurally speaking, the property market holds the key, and that is such a structural issue for them that's tough to overcome. I do think the export push is something that we can't discount as being immaterial. So one would be a massive export push. The other would be perhaps a bit more mobility by Chinese consumers. Again, passport penetration in China is something like 5 or 6%. It's tiny, and the fact that there is more of that push for experiences versus stuff, that could lead to maybe some positive outgrowth from China, but we're really not seeing that materialize quite yet.
Lisa raised this question. Let's talk about fixed income and the repricing of Fed rate cuts. How have we done this with the equity market still close to all-time highs? What's your explanation for it?
Yeah, it's been one where, if anything, the Fed has said, market, you have to flinch because we're not going to. And that flinch process has been, in some cases, gradual. But in some cases, if you also look at the tone, I think Lisa's been all over this. If you look at the mix of the auctions, which we're paying very close attention to, I know that your colleague Tom Keene is not as interested, but we're very interested. And
You're welcome back anytime.
Yeah, exactly. So, we've seen something like 42% of foreign participation drop down to 29, and in some auctions it's been south of 10-11%. So that says to us that this bond repricing is happening really from a mix of more price indiscriminate buyers. Think about pension funds, banks, and central banks. They tend not to be so price sensitive. But if you now look at who's buying bonds, these are asset managers like us that are very, very price sensitive. So in a way, you've had this shift, if you will, away from the almost indiscriminate buying and more into, the fiscal house, if you will, is more important to foreign buyers, and price discrimination is more key.
Is the fiscal house already being priced into the Treasury market, or is this something where there could be a more significant kind of shock at one of these auctions that I do follow and care very much about?
Yeah, I think it's probably second or third inning priced in, Lisa. I think if anything, there's so much noise happening with the Fed. When does the Fed start cuts? Will they cut 2 times, 3 times, what have you? This is probably a late 2024, early 2025 story. Once we get past election, once we get past through some of this Fed noise, really paying attention to not just treasuries, but also the TIPS auctions. Those we think are areas that could be more of a focus for investors. So we're paying very close attention to it.
Eric, true story. This is about timing and not content. Auctions are in the afternoon, and TK naps in the afternoon. That's why Tom will always say he doesn't care about a couple of things, right?
True.
Auctions,
yeah.
Fed minutes.
Yep.
Okay, if he wasn't on air, he wouldn't be watching the news conference with Chairman Powell.
Correct.
All of those things, anything after midday, between midday and the close, he doesn't care about.
I kind of get it, though. I mean, I would just say, I find my lull. But, I still pay attention because it's that riveting. I'm tired, but I still care.
It's gripping stuff. Eric, you're going to stick with us. Eric Friedman. Equity markets right now, futures positive. Actually, almost session highs up by 0.4%. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Morgan Stanley has laid off about 9% of its asset management unit in China That according to Reuters. The headcount reductions are said to have started in December and impact about 15 employees. China's economy has been facing multiple headwinds, from an enduring real estate slump to geopolitical tensions, placing pressure on markets and its $3.8 trillion fund sector. Republican presidential candidate Nikki Haley is set to end her campaign after a poor showing in a string of primary contests, setting up a rematch of the 2020 election in November. Haley is due to speak in her home state of South Carolina at 10 a.m. Eastern. Former President Donald Trump swept Super Tuesday, winning all races except Vermont. Acne products from brands including Proactive, Target's Up and Up, and Clinique have been found to contain high levels of a chemical linked to cancer. Independent testing lab Valisure has asked the U.S. Food and Drug Administration to issue a recall for affected treatments. All contain the active ingredient benzoyl peroxide, which the lab says can break down and form benzene, a known carcinogen. That's your Bloomberg Brief. John.
Danny, thank you. Up next on the program, a Trump-Biden rematch, all but certain.
They call it Super Tuesday for a reason. This is a big one. This was an amazing night, an amazing day.
That conversation up next, live from New York City. This is Bloomberg.